German bonds gain across the curve. The German 10-year yield falls 5 basis points to around 2.49%. One minute away now until we get the market on open imbalance and the US cash equity open. US VP Vance says the US and Europe are on the same page. Looking now to the market on open imbalance, S&P 500 buy side 92 million, Nasdaq 100 sell side 11 million, Dow 30 buy side 43 million, Mag 7 sell side 5 million. According to MOFCOM, China is willing to boost imports of Finnish products and tech. In terms of names out of the open here, Disney jumping 11% after its full-year profit outlook tops estimates in its earnings report this morning. The S&P 500 extending gains out of the gate here. It's up around 0.3%. Other equity names out of the opening gates here. Uber shares down 4.4% as their Q1 revenue misses Cloud's upbeat forecast. And US VP Vance says security posture of the last 20 years is not adequate for the next 20 years. Also seeing shares of AMD up 3.2% after earnings last night, where the company forecast Q2 revenue above estimates. US VP Vance says we think that the Russians are asking for too much. US VP Vance says,
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
US VP Vance says there is a big gulf between where the Ukrainians and the Russians are. US VP Vance says it's probably impossible to mediate this without at least some direct negotiation between Russia and Ukraine. US VP Vance says there is no conversation between the US and China about a strategic deal of Taiwan. US VP Vance says we think China will have to let their population consume more. So keep in mind, US VP Vance hosts a security event in Munich. We do have a live video, just posting it out momentarily. And that's now out on the feed for those interested. He did just answer a question on China, saying he didn't want to proceed the negotiations with China, but did say that they are having conversations. US VP Vance again says open to having conversations with friends and more adversarial national about rebalancing. We think we can do that without preserving. Says we think we can do that while preserving dialogue with China. US VP Vance just confirms that conversations are ongoing with the EU. And Vance says we want European markets to be open to American goods. The EU's Foreign Policy Chief Kalla says the situation in Pakistan is very concerning and the EU is trying to mediate and bring tensions down. US VP Vance says, I think we can have a better trading relationship with Europeans if they would drop trade barriers. So in 10 minutes time now, at the top of the hour, US Treasury Secretary Bessent is due to be testifying. US VP Vance says we think there is a deal that would reignite Iran into the global economy.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
Vance says Trump would be open to sitting down with Russia and China to reduce the number of nuclear weapons in the world. And Vance, back to Iran, says so far so good with negotiations on Iran. So we're just over 5 minutes away now to the top of the hour, where US Treasury Secretary Bessent is due to be testifying again. So keep in mind, he did testify before the House yesterday. Again, testifying today again, where he did say in his testimony that they think they can get growth back to 3% by this time next year. And he did also speak on China, so said very close to some deals on trade, and said that we could see substantial progress on trade with China in the coming weeks. Now, of course, since then, we have seen the announcement from China saying that they are willing to negotiate with the US on trade. So we'll be looking out for any comments from the US Treasury Secretary on how this might look. US VP Vance says Trump thinks the goal should be 5% spending on defense in NATO. And Mexico's President Sheinbaum says there's no sign that the USMCA is going to end. So we're shortly expecting the start of US Treasury Secretary Bessent's testimony. The live video is available on the feed. US VP Vance says, "We congratulate Germany's Merz and we will have conversations in the coming days." So according to a minister, Vietnam wants to buy a great amount of US products. US Treasury Secretary Bessent now testifying. He says that the US seeks to expand leadership in the IMF and the World Bank. It does appear that the live stream we had for Bessent hasn't started yet. We'll see if we can track another one down. So Vietnam trade negotiator meets with the US ambassador in Hanoi, says the US talks address bilateral trade and economic issues. This is according to a statement released by the Vietnam Trade Ministry. Putin and Venezuela's Maduro sign a strategic cooperation pact. This comes after Russia's Putin and Venezuela's Maduro discussed energy and oil as well, according to Interfax.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
EU is seen targeting US-made cars with tariffs if a trade deal talk fails. As we did see from the EU trade chief earlier this morning, where they said that the Commission will announce tomorrow preparatory steps on the next countermeasures to US tariffs. In 10 minutes' time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast is a draw of 1.858 million on the prior draw of 2.696 million. Gasoline inventories, the forecast is a draw of 1.2 million on the prior draw of 4 million. Distillate inventories, forecast a draw of 0.116 million on the prior build of 0.937 million. And inventories of crude in Cushing, the prior was a build of 0.682 million. So keep in mind, we did see yesterday the release of the private API stock change numbers. Crude saw a larger than expected storage draw of 4.49 million on expectations of 2.5 million. Mexico's President Sheinbaum says Mexico and US and Canadian economic integration won't end.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
So in 5 minutes time now, at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast a draw of 1.858 million on the prior draw of 2.696 million. The range sees a build of 1 million to a draw of 3 million expected. Gasoline inventories, the forecast is a draw of 1.2 million on the prior draw of 4 million. Distillate inventories, forecast a draw of 0.116 million on the prior build of 0.937 million. And inventories of crude in Cushing, the prior was a build of 0.682 million. So keep in mind throughout this, US Treasury Secretary Bessent again is testifying at the moment, and we do have a live video on the feed. We are just keeping an eye on his comments. He's not really saying anything about policy at the moment, just saying what the IMF and the World Bank kind of should and shouldn't be doing. We'll keep our eyes out for any key comments on policy from Bessent.
Be here in just a few minutes, guys. Hold on.
US Treasury Secretary Bessent says the US should have red light or green light rules for outbound investment and no yellow zones. One minute remaining now for the EIA inventories numbers. I'll lead with the crude oil inventories. Ten seconds. A draw of 2.032 million, draw 2.032 million, lower than the expected draw of 1.858 million. Gasoline inventories, a build 0.188 million, a build of 0.188 million, higher than the expected draw of 1.2 million. Distillers inventories, a draw of 1.107 million, a draw of 1.107 million, lower than the expected draw of 0.114 million. And crude Cushing inventories, a draw of 0.74 million, a draw of 0.74 million. Muted reaction in WTI crude in response to the EIA inventories numbers. Again, crude oil inventories relatively close to expectations.
Check 1 2.
0.032 million on the expected draw of 1.858 million.
Test 1 2 test. My voice is blowing out. I'm having a blowout, bros.
And we have posted out the US EIA's weekly petroleum status report on the feed for those interested.
Check 1 2. Get rid of this. Rid of that. Morning out there. How y'all doing? One quick second here. Let me get. My voice is like annihilated. So bear with me. I've been pounding water and stuff. But I too much screaming, yelling, second stream last night, that kind of stuff. You know, I was able to watch I don't really get to watch this often. But it came into my feed last night. So I watched this YouTube video. It was the shipping guy, whoever the guy is that's doing the shipping. I guess he got famous during COVID or whatever. And that's all he does, like logistics and shipping. And I think he went to the Maritime College. I think that's in New York City, too. My oldest was considering going, I think, to that same school. There's not many of them. There's like 2 or 3. It's like an engineering school for shipping. I don't know if this is the school he went to. I'll have to look it up and see if it's the right one. But there's like one in New York that's beautiful. It's on like a point. And it's very small, student base, very archaic profession. Very male dominated too, I'll add. But at any rate, I watched his most recent update last night. I was a little shocked as all this information flow is coming out on tariffs and impacts. It evolves so quickly. And then a lot of this stuff, I have no idea what this stuff means, you know. I'm not in shipping. I'm like learning about like empty containers and how much is in a container, or like they have like empty, I don't know what the fuck it is, but whatever. What was fascinating about this guy's most recent update was he was pulling just raw data, which reminded me a lot of Wolf Richter. He's just like pulling raw data about the state of shipping right now. And what fascinated me was that let me see if I can make sure I'm not saying this incorrectly here. China's exports are actually growing right now. More than they were before tariff war, even tariff dispute 2.0, Trump tariff 2.0. So their exports are growing, which can be attested to the United States having disputes with countries and war with China. So China's exports are growing even more than normal, but you could easily say that's because, of course, other countries are turning towards China and this is where the second part comes in, how you can figure this out, which is other countries are turning towards China for trade rather than the United States for U.S. exports. And then U.S. exports are down. So the goods that are leaving the United States are down. The goods leaving China are up, which means that we've got other countries, of course, turning towards China for trade and not the U.S. And if you guys know anything about exports, GDP, that's a no-no for us. We want, of course, more exports than imports, right? That's trade imbalance. So we are taking a hit right now just being in this war with our exports. And there's like knock-on effects of this. What else is fascinating is our imports have not changed. We are in line right now and we are not being affected by imports right now. And what's fascinating about that is that some of it's coming from China, but some of it's coming through wash imports, where like China's sending stuff to other countries, washing where those goods are coming from, and they're still coming into the United States, even right now. So I think a month ago they were saying shortages in 2 or 3 weeks. And then a week ago they said, maybe it's 5 to 7 to 8 weeks. And right now what it looks like, or as of yesterday, our demand, want, and need for imported goods is not or is still being satiated. Now, I don't know. Of course, this will be an evolving, and it looked like from what I watched was that this is a really like fluid thing that's going on, and new information will change as time passes. But I found it most fascinating that this is helping China to some extent, to a greater extent, and we're taking on these knock-on effects on exports. We're all hyper focused on tariffs and not wanting cheap Chinese goods, I guess. IP stolen Chinese goods, you name it. And on the inverse of all of this, it's having a real negative effect on what we export too. And we're not stemming the flow of those imports. And he explained that there's a mix of how that stuff gets to us. And it's not the same as COVID. COVID was different. There were bottlenecks. There were bottlenecks in production, bottlenecks in receiving goods. And it's still a completely different thing. So I just thought it was interesting because we're all looking for these things to really start to hit us. Now, he did talk about last 2 weeks and stuff, and he talked about some container ships are empty, or we don't know how some are filled or not filled and stuff like that, but it's still not the same.
Says, I see up to 2
as
Treasury's demand from digital assets.
It's still not the same as COVID, and further from that, or apart from that, our exports are dropping what we export out of the United States, and that's an issue too, right? That's actually a bigger issue in the background, in trade imbalance with the world at large. So,
stay up to date with the latest.
Getting off that topic.
Payrolls, then sign up today and get our special offer. Or
just turn this off for a minute here.
Years worth of our service.
It's still on. Okay, how about that? Why just turn that off? So, on another topic, it's important with the Besant thing. We should talk about that. I talked about it in a brief last night. But what's more important, especially if you're a member, And I think that our boy Tom Lee mentioned it specifically yesterday. He said de-escalation, and up my just heads up here. I just had a power surge in my office. We have wild weather going on here. Just heads up, if I lose you, I'll have to turn on the generator and stuff. But at any rate, moving past that too. Tom Lee mentioned de-escalation last night, and JPM in a white paper mentioned that specific word, de-escalation. And in a prior brief that I keep bringing up to you about the depression trade is historically a lot of wars, like hot war, usually start out with trade disputes. And the sovereignty of a nation is usual. Like if you break it all down to brass tacks, it's usually most wars begin over money, and in particular currency manipulation, devaluation, preferred currency, all of these things surrounding wealth of a nation. It's why when you see gold, like gold can be an inflation hedge, but when you see gold vertical, it's normally because of war threats, like the way it is right now. And it's not aligned with inflation in truth. Like inflation, the rate of inflation continues forever and ever, but your price of goods go up forever and ever. Like a hamburger doesn't ever go down, right? Even if it's just temporarily with deflation. Whereas gold is more like VIX. It goes up, but it comes back down, right? I mean, no offense to any gold bulls out there, but your gold's not worth, $30,000, is it? It's not. So it goes up and goes down relevant to it's like the VIX of war. It can be the VIX of inflation and other things, but in this use case, it's the VIX of war. As a matter of fact, you saw gold rocket yesterday, right, over India and Pakistan. So the idea here is that most war can be reduced down to two cavemen who decide what seashells we're going to use for commerce. And we're going to use the blue seashells or the gray seashells. And I happen to have most of the blue ones, and you happen to have most of the gray ones, and we're going to fight over what seashells being used, right? We've seen this in the past with the Hunt brothers with silver. We've seen it with gold in the past. We've seen it with everything. It's fairly easy to see. Now, the important part here about this conversation with Besant in China is warfare will typically start with an economic dispute of some kind. Like, I need this, or I want this, or they don't want me to have this kind of stuff. And disputes are normally okay. You can think about this in any way. You can think about this like a boyfriend or girlfriend, husband, wife, sister, brother, friend, teacher. It does not matter. If you're interacting with someone else out there, usually disagreements start with disputes, right? I think this, you think that. And we can usually in most cases, work out that dispute to a resolution. And even up into including, let's say, I don't know, I didn't show up to work. No called, no showed 5 times. And even if I get fired, there's still a dispute that can be worked out to a conclusion. And think about like a dispute. I don't show up to work for 5 days. I show up my 5th day or 6th day, and my boss says to me, hey, Jim, where have you been? And I'm like, what do you mean, man? And he's like, you've no called, no showed 5 times. Immediately, I've been told what the issue is. And the moment that I'm told that, I know what I did wrong or what my boss perceives that I did wrong. And that dispute can then move forward to a resolution. Now, those disputes can grow from there into war, right? Maybe he has other things or issues, or maybe I've actually had this happen. I tried to actually had this happen. I tried to terminate an employee once, and the employee was able to get around the company's employment policy by claiming that he had a drug addiction and that he went on a bender, and they couldn't fire him for that reason. And he was able to get around it. And actually, that escalated into, well, this guy's trying to just get around this. He's just going to use. And we found out he's been using it in the past and stuff like that. But the key point behind this is, once you move away from that original dispute, and now you have other issues, you don't always tell them what they are, and sometimes you do, and sometimes you don't. But when you move from a dispute to warfare, and now this would be where we go from an economic dispute to a trade war, right? Which I think recently I've seen some of the verbiage change to trade war. Not really everywhere, but you can start to see it hit the lexicon recently. That we're in open trade warfare or a trade war with China, specifically China. And there's danger, or there's not danger in that warfare, but there's danger that can happen within that warfare. And one of the biggest things is not knowing what the grievances are, and also a path to solve them. So even if, let's say, the White House policy is, well, we want to break our habit on China, that's okay. And this is not a discussion about that. It's not a discussion about what our White House wants or what our country wants. It's just a question of what are the grievances. That's it. That's all we're looking at. What are the grievances, and what is the solution to those grievances? And when you open that up to two parties, not just one, you could have one party like us saying, I want to break everything with China, just like crush it. And by giving China in this case, giving China the opportunity to address these grievances, not that they don't already know these things, but it's public enough, and it's in paper or even a discussion or a meeting to say, hey, we have problems with IP. And, it's not like we don't already know that, but this is why we're here this time in warfare, trade war. And we're going to air our dirty laundry and say this, and this. And we need this solved. And, of course, we have how we want it solved, right? But you never know the person you're at war with, what they will come up with as a solution to those grievances. And further, if you don't tell people what your grievances are or give them an opportunity to resolve those grievances, within that is the real danger. And if you look back on history and most major wars, we're talking like World War I, World War II, Civil War, major wars throughout history. The Dutch, you guys read that brief? They oftentimes devolve because those things are not known or discussed. And within that economic warfare, there's an opportunity for what's called laddering. It's when we do more than just tit for tat. Sometimes it's just tit for tat, and that's good enough. Like, hey, I'm gonna hit you with 100% tariffs, and then the other country says back, you know what, I'm gonna reciprocal you with 100%, and the other country one-ups you, and then they one-up, right? And that's called laddering in warfare, and it's very dangerous. Not only is it very dangerous, but if the other party, when this starts and you shift from a dispute to warfare, typically in these cases, in our case, a nation will go back to their own advisors and say, can we win this? And if the answer is no, they'll usually immediately succumb. You'll notice this with some of the countries that we're negotiating with. They are automatically saying, nope, we just removed all trade barriers. They have honest discussions within their own nation states to find out if they can potentially win. And you might be thinking to yourself, well, China can't win. They're going to bend the knee in this case. But truth be told, the resistance from China means that, or no response or no negotiations or no open dialogue means that within China, they think they can win. And you might be thinking, well, China can't win this. But I'm going to give you a real recent use case, and that is Ukraine and Russia. We all thought Ukraine, or the popular opinion was that Ukraine would fall within 3 days. And even if not 3 days, 6 months. And they have not fallen to a much larger op force in Russia, have they, at this point? They have held on, buying time. And people buy time, or opponents buy time for a multitude of reasons to get what they really want. Within that window, though, there's real danger of escalation, either from economic warfare to Cold War to hot war. Those things can happen when you don't know how to fix what the problem is as the receiver of the complaints, right, of the disputes. Now, China is betting a few things that I'm not sure, but I'm fairly certain that smarter people within their government said, well, you know what, the U.S. is known for changing regimes quickly. This is a common complaint about the U.S. It's always been known that the U.S. can quickly change within 4 years, 8 years. Dictatorships usually take much longer, many more years. And the reasons with dictatorships, when they fight, usually it's the death of the opposing country's dictator or a regime change of some kind. So in this case, China probably thinks we can outlast at least until midterms, and maybe even wage warfare against the U.S. for opinion along the way to make a change in the politics or our government. Believe it or not, I would. That's what I would do to the U.S. I would, and then we also have just not only that, we know that Trump will be a lame duck, regardless if they hold the midterms. He's a lame duck at some point. Before he leaves office, he becomes a lame duck, even if they control the midterms. There'll be a moment where people stop listening to him, and we go into the general election, as long as he's not going to be running a third term. So there is a chance there for them to outlast us. So when you see like Trump saying he's speaking to China, and he actually hasn't been, it's probably because China thinks they can at least outlast the U.S. And who's on a time frame? Trump is. He's on a deadline. And not only is he on a deadline, people know it. There are very smart people that know how to wage warfare. And if China just doesn't even want to show up, that's bad news for the U.S. So even just seeing this right now is good. And I want, no matter the outcome, the idea that these two parties are going to meet in Switzerland on, I believe, May 7th, 8th, or 8th, or something like that, is huge. It's big. It does away with, or it helps to quell the escalation. It also gives an opportunity for, look at that nice, beautiful curve and arc down here. Also gives an opportunity for both of these parties to not escalate to Cold War and Hot War. And specifically right now, over this weekend, Russia has their VE Day or whatever it is. This is where dictatorships like to show off their military equipment and like national pride parades and stuff like that. Usually done by really bad people. And but not only that, it's going to be marking China turning towards Russia as a strategic partner publicly with arms to fight openly against the West with the mineral deal amongst Ukraine and the United States of America. And that is us officially, publicly moving into from trade dispute to trade war, or to trade war, and now into an official Cold War. In recent memory, in the 1950s, 60s, and 70s, we had a Cold War, and in the 80s too, mid-80s, we had a Cold War with Russia specifically, and we had proxy wars with countries all over the world. We had proxy wars in Central America, South America, Southeast Asia, West and East Berlin, where we fought but didn't fight, right? Less risk of open nuclear war. In some places, we actually fought. In some places, it was a standoff. Some places, it was a buildup of arms, right? And no one really wants that. You shouldn't want that to be the outcome. I don't want that to be the outcome. But that was the track that we were on. So take that news yesterday, even if it's not a direct implication on where we are in the trade war or where whatever Trump is or White House or Bessent or whatever, you should, as a market participant or even as an American, just be grateful that that is happening. It is a positive step in the right direction to slow down this process. Let's take a look at this together. Hold on here. All right. We've got a target down here if you guys want to know what's going on here. We got a target down here at 2 p.m. Now, there's a couple things we got to go over here on yesterday and the squeeze from that event. Now, you've heard me say this in the past. I failed to mention this last night. I was a little tired, but I want you to know that normally, if Wall Street was ready for this, this would stay up. We would not do a halfback trade, and we would not return to the scene of the crime. I assure you, even though we knew yesterday, probably dealer brokers were aware of the possibility of a squeeze because you saw the attempts at it. You could see the attempts at squeezing yesterday here. Whoop. And we had another attempt right here, and we had the big boy right here, right? And they were trying this all day long yesterday, right? You even had Trump yesterday failing to do that. We had Carney refusing to say making trade war progress. We had Bessent in the morning. And that means that Wall Street or someone or a dealer broker had his finger on the button. And I think Trump kind of hinted at it too. Like he had been hinting the past couple days. We had not positive stuff, but trying to be positive for announcements. So someone knew or knows. And then we get into the close yesterday thinking everything is all said and done. And Bessent comes out and says it, right? Big squeeze up. This means that the wrong people were caught in this. And I've always told you guys, if there's anything that's truly unknown, up or down, we will quickly return to the scene of the crime, like right down here. Not in a week, not in 3 days. We will literally come straight back down. They will force this matter so they can get long here. Or get long to go up, or they'll even smash it down and then a week later sometimes take it higher. You can always tell because the way that I've always been able to tell was if you get a squeeze or a bloodbath and we don't return to the scene of the crime for like 3 days, 2 days, 3 days, 4 days, 5 days, they were all on the right side of the trade. If they're in the wrong side of the trade, it's almost immediate, like 1 day. Sometimes the immediacy of it is like straight up and straight down, or a bloodbath straight down and then straight back up. I think Jedi Marcus calls it lifting up the skirt to see what's underneath there. And this would happen to be the inverse, right? Lift up the skirt. And sure enough, they're going to try to bring this down. If they can, they'll do anything that they possibly can to return us to the scene of the crime. And there's some other people involved in this as well. You've got different market participants that want different things to happen. And you got to remember too, you've got this big squeeze from yesterday, happened before the close yesterday, right? And the market's already positioned for FOMC, and then you're throwing in a wrench into FOMC. And so in the brief last night, I said to dealers would find this messy, too messy. You could see some call buying on the open or buying shares or whatever, but the moment that stops, like that relentless buying that they don't have to chase or whatever, dealers will try to like no longer chase that move, right? And we are going to go into some risk off as we head into 230, and all these people trapped over here, they're going to try to get this down as much as they can. And dealers would like nothing more than to separate these trades as well. So you like different players inside of all of this. Dealers want you to, if I was a dealer, I would want you to trade today, right? Trade the day away today, and then reset everything. And we'll come back to this later. Like, thank you for playing. You ever hear that? Thank you for playing. And then you can play that whole thing later. You can play this whole thing like a delayed reaction on this trade yesterday. So the first point to make to you is that this trade is not dead. That trade is its own trade. What's going on with the I thought I missed something here. Okay. This is its own trade. It's not dead at this point. Watch out for a delayed reaction on this. Second thing is that you've got people that are trapped in this trade right now. And Wall Street did not know that was going to happen after the bell, believe it or not, or the wrong people or a hedge fund or whatever. They were caught in this. They're going to try to return to the scene of the crime as fast as possible on this trade, and especially not wanting Jerome to rip this thing higher by 2 p.m., right? So they're going to do anything, or some participants are going to do anything they possibly can, even if they have to borrow money. Shit, not money, but shares. Just like unload to get down here before the after effect of today's FOMC. And dealers as well know that you want to ride this up too, right? There's like a whole bunch of participants in this. And we're going to separate it all, in my view, at least, and what this means. But I want you to realize that this is a big thing. This is important. It's not like trade war over. I don't know or care what happens with trade war. But I also want you to know that a lot of the punitive damage done to our markets, not all of it, but some of it, and why we're here is uncertainty. Due to no grievances and no path to solve those grievances, even if it's the same as Trump wants. You just have to have it out there in public and mark as we go forward from here. Trade war going well, trade war going bad, right? Is the trade war going well? Is the trade war going bad? When is the next meeting? And we can trade all around that, can't we? We got a meeting here on the 8th. We got a meeting here in July. We got a meeting then, and we know we can then price in trade war going well or trade war going bad, right? Where now we can't, or right now, or up until this point, we can't, can we? We get crazy town, don't we? We get like market pumps, market dumps. We get manipulation in the market. We get, I mean, if you like, I got MAGA friends in real life. I got MAGA friends in Discord. In real life, people that I can actually, keep open lines of communication with. It's not easy right now. If you're MAGA, telling people what your position is, right? You're like, that there's volatility, and we want this and we want that. I mean, MAGA, as far as I know, the mantra at one point was, I like Russia and fuck Ukraine. And now, I mean, we're in my view, I like Ukraine, and I got more with Trump as president with Ukraine than I did with a Democrat in office, right? So it's all bizarro, isn't it? And now all of a sudden you see, people's opinions change or the marching orders change as to what they're supposed to say. So even if you're a MAGA, you know that there's volatility even in your own thesis, right? It evolves over time. So I would take this yesterday as a positive development. Not necessarily going to all-time highs, or I saw some people posting yesterday saying, we're going all-time highs and we're never coming back over this. And I'm like, no. That person does not understand what we're trying to do here. We're trying to change our economy. We likely never go back. If we go down this path and stay with it, if we're committed to it, you'll likely won't see that all-time high for could be decades, truthfully. You're like devaluing and revaluing and removing money from the system, printing less money, removing money from the system. There's a whole, you got, you're going to go through pain and companies slowing the economy down, and then companies going bankrupt, and then reorganization, a whole new system. So that's not true either. But this does quell some of the vol. And that is important. And it structures this dispute war to some extent. Even if it grows, it gives the opportunity for markets to calm and for us to measure where we are with all of this moving forward. So take it, or don't dismiss it outright as being a nothing burger. It's a big burger. It's actually really positive. But don't take it either with like, hey, we're going to trade 8,000 because of it, that kind of stuff. We can still never return to all-time highs here, but it does remove some of the punitiveness of how participants treat this, how retailers treat this, how Wall Street treats this, how hedge funds, even if they're not telling you that right now, I'm telling you that's true. It's very, 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 very true. And Tom Lee succinctly said nicely, or put it succinctly last night, saying de-escalation. And his point about de-escalation is the real true fear and danger that lurks underneath all of our skin. Whether you admit to it or not, it removes some of that danger, like real true risk of no communication amongst warring parties. Those are always dangerous. Very, 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 very dangerous. Okay, so moving on from all that, we've got the shortages and rampant inflation out of the way. Meaning what? Are we going to expect rampant inflation immediately? Probably not. Not right now, unless something changes the next 2 or 3 weeks. We're being told that we're washing cargo in other fucking countries, and the U.S. is not seeing a decline in imports. And the other thing would be that this is a positive outcome. Even if it's delayed in the market, you should see market behavior in and of itself not be as crazy as it's been. And so that's important to know as well. Now, FOMC meeting today, we need to talk about that because Jerome Powell typically is not someone that that rocks the boat. And there's been attempts to rock the boat with Jerome, hasn't there? You need to cut, you need to step down. I'm going to assert authority from the executive branch into the Fed. You name it, right? Like shake the cage, poke the cage, you name it. And there's been questions of him being a lame duck. That's been floated and then not floated. And I've heard this fucking for the past 6 months. We're getting a cut. And I'm like, or the last 3 months in particular, and then even last month. I think that's quelled this week or two, but I follow Wolf Richter closely, like very closely. I read all of his posts. I dig when he posts stuff from the Fed and the Fred. I go in the other one there, I forget what it's called, the Bureau of Labor and Statistics. I'll dig back into those statistics as well, not just the blog post. And then I read all the commentary from very intelligent people. And nothing here is screaming. Nothing is screaming that we need a cut. Not today. Nothing screams that we need a cut. I told you last year about the zeitgeist and the astroturfing of the consumer is in trouble. Told you that the consumer was better off than they've ever been, ever, even pre-COVID. We've had long conversations about that on this show, like regurgitate. And they've done well to this point. You've been resilient to this point. We've talked about how the consumer is, how the economic data is. We've talked about markets. We've talked about the shifting tastes of people. We've talked about car markets. We've talked about housing markets. And all in all, I mean, there's some problems out there. Commercial real estate's a problem. Residential real estate is hyper local, and it's never a problem until it actually is. Unemployment, layoffs. We've talked about all this stuff. I've told you that layoffs are bullshit. And then now it's coming out that companies were doing that to fake you out, to stop jumping from job to job. It's more to make fear for you as a pleb like me, right? But then, in fact, there haven't been that many layoffs. Remember when we were laying off government employees and there was like, oh my God, unemployment rate's going to go to the moon? No. So everything that I'm looking at says that you're still good. You're still out there spending money, even if you're front running tariffs and doom and potential or possible doom with like rampant out of control inflation. I yesterday watching that guy from the shipping channel. He's like this shit ain't happening today. He's like you're not getting it today. Then yesterday CNBC was pumping the fear, or CNN maybe had an article about the first ships are arriving with post tariff costs. And you hear all kinds of other stuff too, right? We got a problem with fentanyl. But there's all kinds of illegal goods and shit that come through de minimis, right? De minimis is like 90% of packages that come into the U.S. And if I was a drug dealer or a dealer of fake Gucci bags or something, or Adidas, or I don't know, Air Force Ones or something, I would just switch the country that I sent it to you from, right? So it's not just China. And it's not really fentanyl, is it? It's bullshit. You guys all know it's bullshit, right? It's not fentanyl. It's not the problem. Even in Canada, like, there's more shit that goes to Canada than the U.S. There's more drugs from the U.S. that move into Canada than the U.S. There's more guns from the U.S. that move to Canada and Mexico than from Mexico into the United States. So this isn't the root of what we're trying to do, is it? And there's so much contra information that's for a story or sizzle or a political thing, or it has nothing to do with us in this economy, nor has it impacts the stock market. So I want you to think about today with Jerome. Does he need to cut? No. And more importantly, do we have like a housing crisis right now? No. Do we have mass layoffs right now? No. Do we have banks peddling for cash with their cup out on CNBC? Can somebody give me a loan? No. Are all your friends and families getting divorces everywhere? Are your lawns unmowed? Are there boats all your boats out there? I love boats, and those prices haven't come down. Not to the point where we're at. Are $1 million homes going for $300K? I'm serious, like 150,000. You have cash on you, and those, like 2007, 2008, I had a buddy buy $1 million home for 150K in cash. Happened to be hit a deal fall through from one house to another. Had a bunch of cash. Was renting a house, and he had so much cash. The banks were so illiquid, they were calling back mortgages that were good. Banks, like, you could be paying your mortgage every month, and a bank come tell you, I'm going to call your mortgage. You got to pay it, or I'm going to take the house away from you. That's real. And they just needed money, hard paper money. We're not in any of that situation just yet. And the market tends to forward price in doom, but then it'll trade until we are actually into the doom. like up until the last possible moment of doom. So keep that in mind. Keep that in mind for where we are right now, and keep that in mind with Jerome Powell and how much ammunition he has. I don't see it. I don't see, like, is gas ramping right now, and oil, is it ramping? I know the $1.98 thing is futures, but not taxation on top of it. But I wanted to ask you that question: is like gas $4 or $5? And matter of fact, today it should be like, with inflation, if it was to ramp, it should be like $5, $6, $7. Not in LA, but like the rest of the country. Are we actually paying 300% markups on goods around here? No. Is the knock-on effect of not greedflation, but just mass inflation? Hasn't happened yet, has it? Are we at a point where shelves aren't being filled with other products? You know, like Walmart puts the jugs of juice out, or you go to a sports store and it's all yoga shit. No, we're not there yet. Not in real time. So we've got time. We've got time. And I doubt that he would want to even begin to start cutting now. And they're working on QT still. They're at there's like QT, like I think we're about 2/3 of the way through it, maybe even 3/4 of the way through QT. So today I would be looking for a few things. I think Jerome has spent a lot of time with caution because of unknown unknowns. He's spent the tone and verbiage that he's used is very cautious, which is what I just addressed with you about not knowing what the grievances are and not having a path forward to or solution. And I think there will be that whoop from Jerome. You know, whoop. We've got a meeting in Switzerland. Awesome. He might not address that specifically, but you should hear it in the verbiage and tone that they use, that we're making progress, even if the outcome is still what Trump or the White House or even America wants. This is progress, and this should be taken as a good sign for a solution of some kind. And I'm going to assume here you get no cuts, you get no hikes. And as a matter of fact, I want to warn you too that if those things come true, like you see the inflation rampant and stuff like that, you're not getting a cut. In the 1930s, Fed, I think, was created in 1918. I could be wrong, but 1916, 18, somewhere in there. The Fed playbook back then was to not cut, but to raise rates. Yeah. So, there's a discussion about cutting rates even in July or September. We should see a fuel bottom this summer. We should. Like a major fuel bottom. But I don't even know if you're going to get a cut this summer or this fall. If the Fed could raise rates and tighten more, it would quell demand, right? Even more, right? To help stabilize a rampant inflation, believe it or not. You know, I think a lot of people think like, oh boy, milk's going to $8. They got a cut, bro. In reality, I would want to stop you from buying that milk to stop out of control inflation. And then I would also point to you that if wages keep up, they don't have to do shit either. If wages increase or the demand for wage increase, and if you look at the rate of inflation during COVID, it fucking mooned. It was like vertical. So, we would need to see some real nasty price action in the stock market. We would need to, and then we're talking about MMT. We're talking about printing presses, all that kind of stuff. The whole can of worms. Do you guys want to go back to that again? Do you guys want to go back to like COVID? I don't. You guys want to like go through another fucking COVID cycle? I don't want to go through that. That shit's a nightmare. So I would say I would posit right now that wait and see. And even if they're dangling the carrot in front of you, you're gonna get a cut, right? You get the hot dog and sausage out like Game of Thrones. You're gonna get the cut in summer or fall. That's what that is called betting. It's like the Fed future fund rate. It's bullshit. It's a whole different trade. It has nothing to do with reality. It's pure gambling, baby. And nobody knows what policy is going to be. Nobody has that crystal ball. Nobody knows what reality is going to be. Unknown unknowns are going to be. Nobody knows if this escalates or de-escalates or if there's a path. Nobody knows this. Nobody knows if we're gonna if we buy enough time, if we can change who we're buying our iPhone or what country we're getting our iPhones from. And not only that, there's another gotcha moment here. This decision to change our economy started in COVID, and they began building factories post-COVID. Like people are like, "Oh, we got to build the factories, bro." I'm like, no. They don't tell you unless you check the data, but they built the fucking factories already. And not only that, what are they buying right now? We already know. The data tells it. There's huge spend in what? Factory equipment. It's been going on now for like a year and a half, 2 years. Now they're buying equipment for these factories in the United States. So more time. There's still the risk of that, all that nastiness coming or knee-jerk shock reactions. But we're still in that wait and watch phase too, aren't we? And the market will likely heal to that. We've already priced in the double jackknife down, haven't we? We got the major correction. We got the second leg down at this point. And the last leg for us to take is that depression trade. And they'll likely wait until the last possible moment to take that trade until it's clear as day that's where we're going. So beyond what everybody thinks or what everybody's telling you, I got my bear suit on, I got this on, I got that on, I got my depression trade on. Be at least open to until price action shows us that trade. You know, the real true second leg down. Until that trade presents itself, and there's so much room in there to trade it. It's not like you need to call the top fucking tick and run it down the next, bazillion points. You just need to get in on the trade. So be open to, like this neutral outcome. Even though I don't think that we're gonna, I think our market is done invariably. I think we've broken too much, but I wouldn't be shocked if we failed an all-time high, traded an all-time high, or even traded sideways from an all-time high sideways until that moment. To just carte blanche, so say, fuck it, we're going to sell the weekly trigger and we're going to trade 1,000 in the next 6 months. I think you need to see the price action for that trade first. To take that trade, I think you need to wait. There's a trap somewhere in here right now. And things change, don't they? Unknown unknowns, right? We got a little bit of that yesterday with Besant and I forget his guy's name's He something or He Fang or something like that. I'll look up his name again. We've talked about him a couple times, I think. And so things can change quickly, can't they? Imagine if you're positioned with a depression trade and all of a sudden tomorrow Trump's indicted. Or something changes, war breaks out. You never know. China does everything that we want. They bend over backwards. All of a sudden, that trade ends. Unknown unknowns are real. If you're a new market participant, you might not know that, but I'm old enough to remember 9/11. No one knew that was coming. Nobody. Market did not know that was coming, and you can see it. So just always be aware of that stuff. And so for today, I would say to you, look for language change, acknowledging the easing of that uncertainty. I would also, if there was any kind of negativity that come out today, it could possibly be tied to QT. When you get to the end of QT, even small changes can have large impacts. QT bond market would be something I would be wary about. And remember, too, that reporters are going to want to pepper him with questions in regards to Besant and China talks going better and that kind of stuff. Remember yesterday, the reporters were everywhere? They were everywhere. They were all over Carney. They were all over Besant. Or not Besant. They were all over Trump in the White House. And they were just looking for anything bad, like viciously bad or viciously good. And earlier this week, if you were paying attention to the news cycle earlier this week, there were real pleas from major outlets almost healing themselves, saying there's still time here to escape the doom for right now. We can stop this, right? Or not stop, but just pause and breathe here. And I think you're going to see some of that today from the reporters' questions. Can we take a breather, please? We all need a breather. And I think a lot of people feel like that, too. I think the majority of participants and non-participants are looking for a breather. Like, slow down for a minute. We can do this. Just smoke a cigarette, some a bourbon. Let's, just calm the fuck down for a minute. And I think that might be, if I was Jerome, that would be the tone that I would try to bring to today's FOMC meeting at 2. Would be slow down, chill. And I think that that's needed. And I think Jerome would be a party to that. He's kind of that guy. I don't think you're going to get Jerome today saying, burn it all down. Fuck it. I don't think that happens today. So note that SPX at the money volatility as of yesterday before that information was expected to fucking moon today. And some of that gut punch at this point is likely removed from today's, even though it's high and running high, volatility for today. It's not as high as it was yesterday. It's not. And the implications of that, unless something we don't know today, I would expect that doom, even if they want that down price, even if they're like, hey, we still want that down move, should come right back up. And on top of that, we also have velocity on the daily trigger is very strong right now. So coupling all these things together, like mixing it all up, if you're a bear or something like that, or you're doomish, if you're part of you're doomer and you're doomish, look for an exit if you can find it. At least for right now. I think and remember too, we start rear viewing this stuff. They start repricing options today, and there could be a little bit more upbeat outlook. And remember too that you and I consume this shit 24 hours a day. That news yesterday to a Main Streeter, like Bob on Main Street, he got some relief out of that. More than likely, a lot more discussion about this. As a matter of fact, I went on to Reddit, and the post on our news about that yesterday had minimal comments today. I think this morning it had 25 or 50 comments. That means that the algos didn't like it because it slows and stops the rage for a minute. So it was interesting to see that too. This is not what, if you're a doomer, like, and I'm doomer too, like I think we're getting that jackknife leg down and we're fucked. But yesterday, that shit slows it all down, at least for today. You'll get another chance, I'm assuming, after this meetup, right, in Switzerland. Oh, you never know, bro. It's a whole new story, right? The talks are going bad, straight down, right? Oh, tops are going good, straight up again. But at least now you have some signposts to assign to that at this point. What else we got here? Besant was out here talking about Treasury, which I think should be the focus today. If there's a focus, It's Treasury, like Treasury bond market. I think that's going to be a key talking point today. And you've got some of that already going on this morning. I put that in the brief last night, and you're already seeing the chatter about it today. That makes sense to me. So let's look at that really quick. You got Besson making some statements. He's man of the hour right now. Looks like the hero and the savior. Let's go here and take a peek at some of this. Oh yeah, look at that greed indicators off the charts right now. Everyone's getting pumped up. Besant, I see up to 2 trillion Treasury demand from digital assets. Besant declines to say which countries the U.S. could reach trade deals with this week, saying it would be detrimental to U.S. interests. Goes on to say some trade negotiations are quite advanced towards agreements in principle. He says negotiations with China are beginning on Saturday, right? What do you do? You wake up on Monday with a big ass boot up your ass. Remember, dealers today are going to try to reset options for that potential, right? China negotiations will begin on Saturday in Switzerland. Trump trade advisor Navarro won't be joining the China talks in Geneva. Talks with China on Saturday are beginning for talks, not advanced discussions. So this is not like you shouldn't expect on Monday morning to hear they started food fighting and shoes were thrown across the room. You shouldn't see any of that. Not only that, I would not ever discount China in negotiations. They were highly educated. China's a dictatorship. So they put the people in power permanently to work on specific things. What makes China dangerous is they can have one will in their nation, one voice to their people, and they can be unified. And they're not dumb. Don't think for a minute that don't ever undervalue your opponent. They're dangerous at negotiating. And I would, if I was an American there, I would have my best negotiators at that meeting, and diplomats and negotiators and very highly intelligent people once those negotiations open. So I wouldn't expect any I wouldn't expect any doom news between now and Monday from that initial meeting. As a matter of fact, if I was China, it would just be not an open book. Well, publicly, privately in that meeting would be, hey, say whatever you want to say. You know, the more information I can glean from you, the better. So I wouldn't expect any kind of doom between now and Monday over this meeting. Besson's saying negotiations with China just beginning on Saturday. Said Navarro won't be there, and he specifically says talks with China on Saturday are beginning for talks, not advanced discussions. That makes sense to me as well. Besson saying the Treasury market was well functioning in the April turmoil, right? I've told you that, right? We're doing fine. We're so far we've done well. Most of this move, not most, but a portion of this move is punitive, and we've handled a lot of this quite well, front running all of this doom. He goes on to say there is a broad investor support for treasuries and auctions. I agree with that too. We do know that historically, April of last month was the largest inflows of retail money in history, and that was likely retailers dollar cost averaging from 60 or from 72, 73, and 62, DCAing so they could come right up during this earnings season for big tech and then exit the market. We also know that the retailers exited last Friday. We were told you that on Friday. We told you just Thursday and Friday. Get out now. Take your money and run. For next week should be a sideways week, right? And we should get a bigger move into OPEX, right? And then another bigger move after OPEX too. We told you that in briefs. We told you that in the Discord. We told you that everywhere else. And where did that money go? Where did that money go? Do you know where the retailers went? They went into the bond market. And so retailers are real smart. They're smart money right now. They're doing a great job. They're not as dumb as you think. And they've gone into the bond market. Now, who stepped in? Who stepped in? Professionals, institutions. They stepped into this market. CTAs, COTs, long, short funds, all the institutionals, they're here. They're the ones that are long right now. They're the bag holders here. So when you think about yesterday and the squeeze and the comeback down today, this is these guys. It's not you. It's not I as a whole. These are institutional players here trading this. This is their trend right now. And Besant going on to say the Treasury market was well functioning in April turmoil. We and the Fed have a very large toolkit for Treasuries. Who's this message to? Retailers. There is a broad investor support for Treasuries and auctions. And that's also good too, right? What does that speak to? It speaks to what? It speaks to people willing to buy bonds, right? Americans willing to buy bonds. They like that, right? Foreigners liking to buy bonds right now. And it also shows that other countries, even if they're angry with the United States, are more willing to enter the bond market on what news? On China discussions and U.S. discussions improving. This helps other people to gain a little bit more confidence. So Besant wrapping that up with there's broad investor support for treasuries and auctions. It is time, he goes on to say, it is time for China to graduate from developing country status. Also a note here, Z does arrive in Russia right now. I told you that earlier. That is potentially negative news. Keep your eyes and ears open for any announcement in this VE thing in Russia. If they make a public announcement stating, yeah, we're going to start arming Russia with actual arms. I forget what it's called right now, but there's two types of support. One of them is where, like, I give you uniforms, or I give you, I don't know, batteries, or I don't know, water filtration equipment. Then I'm giving you arms, and I'm giving you jets and planes for maiming people. And that we think that, or that was the potential vol, was that they would do that. I would pay attention to that between now and Monday. So you're likely not going to catch vol from China-U.S. stocks. You're likely going to see a focus on the Treasury market today, and you're already seeing it. And you'll likely, if there was volatility from now through the weekend, if you're a bear or a doomer or something, and you're looking for a shock moment to the downside, which are normal, right? Market doesn't go straight up. Market doesn't go straight down. If you're looking for a moment to maybe buy the market, looking for a big down move next week, week after, not the week after, this week at some point, looking for some bad news, it could possibly be in that China-Russia agreement. And we still don't know either if the U.S. has spoken to China and said, hold on signing that agreement. Maybe the big boys come in and force people to the negotiating table. We know that if China is on their way to Russia, that Russia's turning to, well, I mean, you got to figure, like, Putin is looking at Ukraine going, fuck, they just made a deal with the United States. I need to go to who? I need to go to my big brother, China. And they hate that. Russia does not want to be the vassal state of China. And they're turning into that right now, aren't they? Putin has stated clearly that he wants this grand vision for his legacy to return Russia to its like once Slavic great status as a world leader. It's been something they've been chasing for a long, 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 long time. And they can't succeed with that if China is their patron. So we don't know what happened in this discussion. If it was me and I was the negotiator, I would ask China, hey, as you're heading over there, Can you just like pause the full-on arming, and maybe we can even negotiate down the road after meeting in Switzerland. Get more involved with the negotiations between Ukraine and Russia before we all move into Cold War status. So if you had some potential there over the weekend, if that deal is signed, that would be unexpected. If they sign that deal, if it comes out that that deal did not come to fruition, that could lend some huge fuel to an upside move in the market. So just be aware of that. If there's any potential vol, it's that over the weekend. And it could also be a boost to a huge upside move in the market or be interpreted. So just be aware of that between now and after FOMC and over the weekend. What else we got here? Mexican President Sheinbaum USMCA review will take place in 2026 per treaty. We know we've been up and down over the USMCA. They have a schedule for that. I think there's negotiations this summer for USMCA, and then the agreement ends in 2026. But this summer there's like a meeting about that takes place pre-scheduled. So there'll still be some vol from that this summer. Bessent saying the U.S. will always meet its debt obligations. That was that bullshit conversation yesterday in that appropriations committee yesterday. What if we hit the debt ceiling, bro? That's a political thing. Has nothing to do. Like, we can just get rid of the debt ceiling. We'll just print more money. Every country does it. That's a political garbage thing that we do in the U.S. Most countries don't even have a debt ceiling. That's used for scamming you and I. Debt ceiling. It's basically when pork gets into a lot of our bills, right? Debt ceiling is used for fuck the American citizen. To be honest with you, so he says that like Lannisters will always pay its bills. Is what Bessent is saying. Trying to pump up the bond market. What else do we have here? What else we got here? Bessent goes on to say many bank capital regulations may be too tight. The unfettered ability, that's a big one for today. Capital bank regulations might be spoken about today. He goes on to say the unfettered ability to borrow has made the U.S. more prolific. He says the market may discipline us one day. We're working to avoid it. If you read recent posts by Wolf Richter, he like torches people on this whole like debt to GDP ratio. We're doing quite well right now. If we weren't doing quite well, you would see Fitch, S&P come out, Standard & Poor's would come out, and they would be downgrading us heavily right now. We're actually doing quite well, believe it or not. Debt to GDP ratio, it's like a curve that goes straight up. And it's actually come down a bunch, and it's flattening right now. There's a little bit of an uptick, but it hasn't made a trend. It's more like a squiggly. Not so much a trend made yet as to doom and gloom. So we know about that. We also have a softer tone from Vance. This is the softening of stance temporarily, saying the U.S. and Europe are on the same team. What else do we have here? I think that's it. The last thing I'd talk to you about here would be that I haven't addressed at all would be the conflict between Pakistan and India. They're two nuclear powers. They could start a shooting war that turns into a World War III and that kind of stuff. I'm not going to spend much time on that. You'll not see me spend much time on it on the show, mostly because I don't know a lot about that conflict. I know some things about it, baseline. You guys have always heard me say, I don't know if you guys know this. Most of you guys know this. The real threat to the world is probably Pakistan. Not the world, but if you wanted a third superpower, you have like China and the U.S. as eminent superpowers. Pakistan is probably, in my view at least, could you really truly unite the Middle East and parts of the Asian continent as well. So they're not to be trifled with. As far though as like my thoughts on that, they don't run our markets. I'll be honest with you. They do not run our markets unless that conflict escalates to involve the UN, NATO, China, Russia to an extent, or it really ramps an escalation. I would assume that I'm going to assume here that most of the world country or world leader countries are involved in this in the back end. So I don't think that it impacts our market just yet. I don't think that it's going to have like shocks to our market in its current form. So you're not going to see me address that too much here on the show or how it impacts our markets at this point. And I'm still going to stay out of that conversation until it does matter. If it does matter, we'll get into it, but don't expect that here. So I've been asked that a few times. I've been requested to talk about it. And, I've got nothing to say. It's very similar to I was asked to take a side about Israel and Palestine. There's no winners in that conversation. I'm not going to do that here either. There's no winners in my view in where that conflict is at this point. So you're not going to hear me talk about it unless it materially impacts our market in some form. Okay, so moving on from that, what else do we have here? I think that's all I've got here at this point. Let me see if I can find anything else here. Yeah, hell yeah, man. WTI making fresh lows, baby. We're likely going to take that trade. We're going to take that summer trade on the inflation bounce. If we can catch that trade this summer, we might become the oil market show or something. If we can get wrapped up in that trade. That trade's down. That trade is coming closer and closer into the spotlight. I am monitoring it in the background here. I don't think we're there yet, but I think by like midsummer, June, July, we're going to need to start taking a look at the oil markets as a potential long. What else we got here? Talks with China are beginning talks on advanced discussion. So I've got here for you. Give me one quick second here. Welcome, by the way. Can you guys do me a favor? This show is free. So we don't have any sponsors. I've never sold us out to Ginsu knives or anything like that. I've never tried to the only money that I ask for is people to support the show, and they do. They join us on in our Discord and on tradethetrigger.com. But for majority of this stuff, it's all free. I've never raised prices before. I'm getting getting murdered here with inflation. So if you could do me a solid, I would appreciate it. If you could like these videos, maybe repost links to them on social media, make a comment on YouTube or Twitch or whatever, do whatever you can do. Follow, I guess, or subscribe. You never hear me say, I rarely say this shit. So I'd appreciate it. It helps us with the algorithms. It helps us to get more followers. And I would really appreciate if you could do me that solid. I don't want to ever have to take on sponsors or raise prices, that kind of stuff, to keep doing this because it's very time intensive, equipment intensive. It costs me a lot of money to read when I read stuff off to you guys, I pay thousands of dollars every month for what you hear out of my mouth. Believe it or not, it's all open here in the background, and I pay a ton of money in services, and it costs me a fuck ton of time and money. So I'm putting a plea out there, I guess, to say thank you for watching the show, and if you could please repost links to this show, saying, hey, we got the FOMC show up. It's one of the biggest shows that we do. All year long, this show is it's it. We get normally between all platforms 10 or 15,000 people. We stream to I think right now 8 different places. I think it's 8. We're up to 8 right now around the world. So we try to count how many people watch in total in the background, but it's stupid. And then we've got a bunch of rebroadcasts of this show in Discords and stuff that we don't even see those views on. So I really appreciate it if you would mind doing us a solid and just maybe posting a link wherever, or talk to your friends somewhere if you're StockTwits or Reddit or wherever you are. Truth Social. I'm try to be pretty neutral here in terms of like I don't rip on Dems, I don't rip on MAGA or anything. It has to be tied into the market. So I just really appreciate it if you could do me that solid. What else? Moving on from that, we've got. Let me just check some other stuff here really quick. I've got some more data I'm going to pop out here for you inside the Discord here in just a moment. Hang tight here. Oh boy, these I'm reading some stuff here, which is there's a lot of anger. I'm assuming these are short. These are probably institutional rage right now. There's a lot of peddling right now to not trust the U.S. market. I've got some stuff for you in the Discord for members. Just post this for you in the Discord really quick. Am I in the Discord? This is how the options market is positioned for today. If you want to see the positioning in the market. So you can see the implied move today. Let me just take a peek at this. Yeah, we basically stay in line with expected moves. I want to note to you right now that there is I'm not going to post this in the Discord, but there's a lot of like selling. It's not selling ohm in terms of I'm trying to sell the market. It's selling you my ohm, like I'm short here and I don't want you to start squeezing. Let me look at some of this stuff. There's an implied move of 1 or 1.1% move up or down in the S&P 500. Let's take a look at that really quick. Let's take a look at what a 1% move would look like. So this is look at this together here. We've got this is 2 p.m. right here, and we're going to talk about this with everyone right now. We're going to talk about positioning, and we're going to talk about if you're new to FOMC or how options impact how we trade FOMC. Remember that I always try to dumb this down for people. Think about it like think about events, known events, like you're in a backyard. You and all your friends are in high school or college, and you guys like to fuck around and find out with each other. And you're like, hey guys, I watched UFC, man. We should start fighting each other in our backyard. We're not going to make it real, just like friendly. And we all watch UFC together and we chat about it or whatever. And one of your friends is like, well, I'll take bets. We'll make it a fun, friendly thing. And how's Bob going to do and Mike going to do? And you place your bets for this event, this backyard UFC competition. And all these bets are placed. Right? And Let me go. And so in our case, dealers try to take bets from people that think we're going to moon and take bets from people that think we're going to crash, right? And as long as there isn't more instigation of buying or selling, dealers will attempt to make these moves fail just before their target. Whoop. If there's no like, oh, doom and gloom and more doom and gloom as we're rolling down, so you get like volatility. Let's say we're talking about we get the Jerome's like everything is honky dory. We go up, fail, then we get the Q&A, and it's bad, or front running the volatility of maybe it's bad, but then it's not so bad, right? Or if it is bad and people go, whoa, that was really bad what he just said, let's buy more puts, then dealers have to chase, right? And they will chase these moves down, and they will chase these moves up, but only if there's repetitive or a new round of buying puts or calls or selling puts. You need like more than just what the positioning is into these events, these known events. If we're going into a known event and nothing triggers any more positivity or any more negativity, what a dealer will do is he'll stop short of those expectations, and then at the end of the day, they will wash you out. So we could go up, whoop, up again into the close, and then sell. And they'll force you and they'll say, thank you very much for playing. You ever hear that meme, right? Or that lingo? Thank you for playing. And then you'll hear people say things like, well, we have to absorb what was discussed, digest. That's also dealers resetting options for the prevailing view of the market. Oh, that was actually really bad. I'm going to load up on puts now. So this is a separate trade. This is its own trade. This is its own trade in here. And unless we get like continued put buying, call selling, or call buying, put selling, you should see us stay within a specific range today. And furthermore, even if we get that continued selling or buying or whatever, depending upon how you're doing it, you'll still see options be repriced until that next wave of call selling, put buying, call buying or put selling on the opposite side. So be aware of natural resistance and support, or demand and supply. And sometimes we'll get failures and repricing and time decay, and also gamma hedging decay as the day moves on. All that also coupled with option interest decline and event interest decline, right? And volatility blowing off or increasing. So think about time decay, think about option decay. There's a lot of mechanical moving parts in here. And then also think about dealers wanting to wrap up this trade to get into the next trade. If it's down below, if it's higher, all important points to make here. So we have an implied move today of 1.1%. We're kind of parked in here, aren't we? Awaiting Jerome Powell today at 2 p.m. So there's a few notes we want to know here. Number one, we've got the FOMC press release at 2. We will have that for you here. We'll also have the audio news squawker to guide us through that press release. I'll post the the official press release to the Discord. And then at 2:30, we get a Q&A. Some of you already know this, but some of you might be newer participants. We get a Q&A here we'll make this one yellow. And then we get another one here, another yellow one here for the presser. so that we can remember when these things are going to happen. And there's multiple trades here. Normally in the morning, when we come into this market, I always call this the Harlem Globetrotters trade. Normally in the morning, you get like traditional classic trading patterns. And then we position ourselves for squeezing and maybe failure, or trading down for an implied rip higher, or even a bloodbath. Maybe we don't know what's going to happen, but other participants do. But what I want you to remember here is this is our baseline right here. Right in here. We want to look at what a 1.5% or 1.1% move is. And look at that. Shocker. 1.1% move is right where we are, right? There's our upside range. Hold on, a little bit higher. 1.1%. What do you call this? Priced perfectly, right? Within range. Priced, it's almost priced. You ever hear priced to perfection? That's what this is. Priced to perfection, right? There it is. Maybe they can show that better if that helps. Now, downside. Let's take a look. Nope, wrong one. Whoop. Right about there. Kind of priced to perfection, right? And what do we have in here? Let's take a peek at this and see what we have. We've got the daily trigger, which has been very strong and supportive, unless we get news we don't know. Just underneath, right? So if we get some doom down here, but it's not really that bad, we get some volatility, front-running volatility. This might be a nice inflection point if things aren't actually that bad to buy a dip or to consider buying a dip, right? If we don't get that doom where we roll underneath that implied 1% move, this would be a telltale sign that we have more, call selling and aggressive put buying, right? Dealers would need to chase this, and we'd have a bloodbath on our hands, wouldn't we, underneath here? Same thing to the upside. If we, let's say we come down here, we start up, we're gonna front run all this, right? And you're gonna see some failures in here, right? Failure here, and unless we get some really huge stuff chases up and out of trend, we know then that this is outside of our expected range, right? So today has one of the lowest implied. Today has, if you look at that chart I posted for you, this is one of the smallest moves expected today. And that can be viewed in two ways, that we're mispriced. We're priced to perfection, but if we have unknown unknowns come in, we could be way mispriced, couldn't we? If we have some kind of like volatility, either positive or negative, you could view this in that way. But also you could view this as we could be roped in here, and you see a delayed move. Well, hold on a second. Yeah, I got that right. Nope, hold on. Clean this up a little bit. Let's say you get the press release. Hold on, we'll do that better again. Just pretend you get a little bit of doom in here. You get the press release. Whoop, right? All of a sudden, we get the presser. Come back down here, hit the bottom side. Hey, dealers happy. And then we ramp up here into the close, and then we sell. Then you get the delayed reaction, let's say up, or the delayed reaction down. This could be the inverse, right? Where we blast down here, squeeze up, then we're down here, you're all doomed up, and then we squeeze up after the close, and then make our way down later. And what's most important about this is the failure that happens before we hit the target, and this would be lower, and this would be higher. But I want you to remember that you want to be putting on, if you're going to trade this with zero dates or anything like that, you want to exit your trade early if you can, and then jump back in if they're repricing options throughout here. And number two would be you can enter and exit. If you're a directional trader, always have upside or downside stops. So if you're bearish for a downside move, take the money and run early before they rip the no intrinsic value options out of your hands, right? So let me explain that better. So you got, let's say you're like, I'm calling downside cap. We run all the way down here. You want to get out because there's no value in those zero dates. Another thing you could do too here is try to capture the entire trade today. We don't have a big move, do we? If you see the implied move for today, you could also just do a fly right up here, right down here. This is 542. I would maybe do 538. And then you've got 574 and 5 up here. I would do like 578 or something like that. You capture the entire move. You don't care about the ups and downs. You don't care if we stay in here. You don't care if we even go up here and come back down, right? As long as we stay in here until after the move is done and we don't get any kind of unknown unknowns. Another thing that you could do is also if your bias is, well, Cap, you're wrong. We're going to go down here and then we're going to escape all this. You could also take a trade that has outside the money ability here. Let's say it's 10 cents, and this one ramps to $1.20, then you don't care about this side burning, or you put more time on both sides so you can capture both the downside and the upside move. And then another thing to do here would be nothing. And this is the last part of the conversation. These events are fraught with trying to take all of your money in gambling. There are so many better setups, so many other trades you could take. And let's look at this for a minute. We're always eyes on the prize here, like, Cap, I got to get all the way into this trade, like, right now, bro. I need the bottom tick, bro, and I need the moonshot. You could always take the sell signal on an upside. You can always not be wrong. Let's say we get a downside move. We bloodbath down to the depths of hell. And this is called being a reaction trader, where you don't care if we moon. You don't care if we go to the depths of hell. You're just Johnny on the spot down here. And this brings me back to, as a reaction trader, it sucks because you don't get to brag to your friends that you called this right. Bro, I would have been so rich. But instead, you're the trader that lasts. You're the trader that is pragmatic. You're the trader that trades the reaction. You get to buy the dip, or if it's even super bearish, you get to then position. Maybe you missed this downside move, but it's really fucking hawkish and bearish. You're just waiting right here. Slam down, come back up. You guys all still bearish? Okay, I'm right here for the next leg. All the way down. Easy peasy, no-brainer trade, right? Depths of hell, baby. So you don't even need to predict this stuff. You don't need to be looking at this here and saying, Cap saying we're going higher. I want in right here. You could just be sitting up here ready to sell. You know? So these events are, for most people, I want to say like 70 to 90% of you either get lucky, and if you're wrong, you disappear. You pick the upside and it was the downside, or you get cut up. You know, you're like, oh, I picked it right, bro. Right? But then you didn't sell. They reprice your options and they're back up again. You know, you're like, you got an option that's, 50 cents. And now it's $3. And then it's 25 cents. You panic sell, then it rips back up. Now it's $1.75. You're just getting like whipsawed. Now it's down here. Now it's worth 10 cents. You know, it's like whipsaw, and you're reacting to a bad original trade rather than just sitting up here waiting, sitting up down here waiting to buy a dip, or even just letting all of this play out and reprice. You get rid of the events right down here, up here, right? Event cools down a little bit. Hey, look, we got the ball, cock and balls. We're going to take a long after this. You know, so my point to you here is sometimes these events are better to just digest. Some of you know how to trade these things. Some of you don't. Some of you choose not to. And the last point I would make to you on this trade today would be, last point that I would make to you on today's trade is this. A fine lesson in hindsight trading is that you only hear from the winners. You might get one or two voices saying, I got blown up, this or that, but whoever is wrong usually fades, especially when they call it. You'll hear an early voice in the day telling you, bro, we're going to the depths of hell. Bro, we're going to the moon. And if they're wrong, typically, they just fade away. And then they come back when they think you're not or don't remember. So you have to be really careful on days like today. And you don't know what their positioning is. You don't know what they want to happen, not what they think is going to happen. So days like today can be very emotional, or they're selling you their ohm, or they're already positioned lower, or they're short from up high, and they want to see more burn in the market. So days like today in particular, blinders on and make your own decisions. And I would also say to you that if you're in any kind of like short dated shit, directionally, be happy with whatever you make. Don't come back and be like, oh, Cap, I bought this for 10 cents and I put a 50-cent upside on it. It went to 50, bro, but then it went to $1. I'm so mad. I should have stayed in. I could have timed it. I should have raised my stops to $1. You just took a trade for, 10 cents and made 500%. Be happy. Took my winnings, live to fight another day. And the better trade here today is no trade at all. I'll be honest with you. Days like this are meant to take your money. That's what today is meant for. The intent here. And there will be winners. And that's the only voice you're going to hear. You're going to see the other half of people not say a word. And they get blown the fuck up. And if you particularly out there have a small account, you have no business trading this. Zero. You should be trying to build your account slowly with low risk. Not slowly, not necessarily, but with low risk trades. So in my view, these are the worst days for you to be trying to build your account. You could just save your money. Even if you in hindsight said, I would have been right, I would have been rich on that day. There are so many easier days to make money in this market than today. So if you want to know what I think about where we're headed, where we're going, and all that kind of stuff, it's going to be just like this. Up, down, all around. That's my expectation. Stay on the edges. And if anything, you could just sit on your hands if it doesn't go your way. If you're bearish today and you sit on your hands, it's up here, you're like, whoop, I waited, or it's bearish and, oh, I missed the trade. I'm just going to wait for the next rejection point up here. Such a better way. But it does fuck with you mentally. It does fuck with your emotions. It's a very normal part of trading, investing, all that kind of stuff. So we've got some targets here. We're going to slap these two up here. We're going to take a look at some of these natural rejection points and whatever. We're going to leave that up there. We know that up there is an implied move, right? We know above we've got the outsized move up here is 574. If we trade out of range to the upside. We also have this R5 and R4 is right below here. So, you know, failing up here seems apropos. On the downside, we've got this little bad boy here. Oh, hold on here. Oh, come on now, move that over. Move that over there. And I want you to remember this is S2. This seems appropriate for a dip buy and no bad news. And also note this daily trigger down here like that. And we're going to scale out a little bit and just take a peek at what a bad FOMC looks like. We've got the island in the sky, bro, right? The David AMS island in the sky right here, right? They shouldn't be doing that, but we got Poop Island. We're island boys, right? We can stretch all the way down here, can't we? We got this big old block right here. Woo! Right? One touch to the downside doesn't make us lose Poop Island. We do know that if we lose Poop Island, it would look more like this, right? Blast through Poop Island. Blast through daily trigger. Begin to make a new low. Start getting nasty with it. There's another target down there, right? And then we can start getting our bear on. And if we get our bear on, where is that? Party time, right? We got lots of room. You want to be getting bearish? We got lots of room, don't we? Tag it, and tag it down here, right? So all kinds of room for you to wait to make the most money. You don't need to be up here, do you? Be right down here, right? You don't need to be the first guy in, shot calling this move. You just need to be in part of the move, don't you? The most money is to be made here. And the most money is made right here. Right? Got another island right here. We got good velocity right now. 30 minutes. Let's take a pick. 30. Let's take a look at velocity here. Oh yeah, baby. 30-minute velo looking sexy. 30-minute velo or 30-minute velo hour, or it's hourly velo on a 30-minute chart, which is what you want to be using in day trading. Looks gorgeous, doesn't it? You want to see the last time we were in here? Crankorama, right? Woohoo, baby! Right up here. Looks gorgeous. Let's look at 15-minute and half-hour velo. 15-minute looks good into the event, but the half-hour velo, not so much. So this is saying there's possibility of a downside low today. That's good to see. It should be bought by hourly velo. And daily velo looks dangerous to a bear. This looks like on a daily basis, we want to party into OPEX to the upside. So unless we get a shock today, I'd be looking for a dip to buy if possible, if it even presents itself. Personally, unless we get a shock. This all looks gorgeous. Very, very nice. Now let's check the options market as we head into today's event. 12:19 right now. We're going to talk about Gamma. Gamma, baby. Oh, yeah. You guys are already getting itchy, aren't you? You guys are like, I'm long, baby. Call spreads. We're going big time, Cappy. Whatever low I can get, baby, we're going up. We're going to put this back on right here. Put this daily expectations back up. Intraday, we're a little bit bullish right here. Watch above for some rejections to the upside. Got a nice little, you guys already know what this trade is right here. It's a nice little 5-minute trade, isn't it? Look, every time we do one of these things, he tells us not to do it, and then we do it. Every time he tells us not to be fucking degens, and then he tells us the whole entire trade and why we're going to go up or down today. So let's talk about gamma in the market really quick. We're going moon, baby. We're going to take a quick look at the market overall here. And that's why we come here, Cap. That's why I repost your shit. We're degens, baby. Hold on here. Now let's bring this over here really quick. Let's take a quick peek down bottom right-hand side. And we're going to look at a few things we're going to look at. We're going to look at VIX 9-day here. Oh, yeah. Oh, yeah. Let's take a check Velo on VIX. There's a little bit of bullishness here on VIX, but it's extremely bearish on a daily basis. So there is some vol tied to today. We could see this see a quick, the hourly looks pretty bullish, so maybe a quick spike up, then a spike down, which would be some cooling, but then a little spike up here could be on the table before a bloodbath to the downside here. So I'd be a little bit wary of a downside move. VIX looks a little bullish here. The daily trigger and Velo looks like it wants to sell vol, though. So if we get a downside move here, today, we get the downside move, it would look like that would be bought and supportive to sell us down. And we also have the news yesterday about Besant in China. We should reprice vol slightly, even though this probably looks bullish to a lot of you for a breakout. I don't see that right now. I actually see this as being extremely bearish and a trap for bears personally. And we're likely going to go into the 16th over here to sell volatility and look for a repricing into OPEX, in my view. Then you'll get that one nice little spike up and expiration or something like that, or just post-VIX. I would expect this to be post-VIX paration into end of month. We expect to sell after OPEX as long as we stay in. If we stay in track, our crystal ball says that we should be good to go. So a little quick spike in VIX down into the 16th. And then a nice little fucking spike up into the end of the month. 29th over here. Crank that bad boy up. Back into the daily trigger. That looks right now, unless there's something we don't know. We get some unknown news. Start cranking up. We can't predict that kind of shit. HYG right now. Where did everybody go? There is a gap to close over here. On HYG. I know you guys are like, you can't be using this stuff for this stuff, Cap, but yeah, it does actually work. Momentum does work for this stuff. But just note that there's a little bit of weakness here. Or we get the squeeze up into the 16th, right? Quick slam down here, right? Squeeze it up, get the new high. Come back down into the end of the month. Close that gap. There's your doom trade into the end of the month. So kind of a mixed bag here. Dixie. Let me take a look at Dixie really quick. We can just pop. We'll come back to Dixie here in a moment. We'll talk about Dixie and the 10-year here in just a minute. We're going to look right now at the options market and a gamma that's important here. And I'll draw your attention to, type one quick second here. Just want to bring up my gamma chart here in the background so I can work when you guys aren't seeing it, so we can pop it up here in just a moment. Hold on here. Gamma, SPX, gamma. All right. So currently, this is net gamma on the market. Just so you know, this is SPX net gamma. Currently, the market is trading at 56.11. which is right, I don't know if you can see this, but right where my cursor is. And the market is priced pretty appropriately, isn't it? For movement, we can swing all the way down here, right? This would be your like intraday expected put wall. But we could sweep down here. And we could also sweep up here and reject too, right? Could actually break even higher, couldn't we? And higher. Call wall intraday up here. You could theoretically, if we only have a 1% move expected, say that's the call wall right here. So we'll mark a couple of these things right here. Downside 55, 25, 55, 25. And then the unless we get renewed put buying or something like that, 5,500. So we'll mark this on our gamma chart over here, 5,500, which is just below the daily trigger. And where's 5560 is right in here, or 5,600, excuse me. 600 right here. And we've got 5,650. Let me post that up here. 5,650. That's the gamma flip. All right, so the gamma flip's lower, it looks like right now. 5,650. 5,700. And 5,750 up here. So we got 5,700. And then we've got the big bad boy up there, 5,750. That would be a huge move in the market up here. And then we've got up here 5,800. Some of you guys know about the upside risk to 5,800, right? Some of you guys know about this from the post, from the brief from last night. Now let's look at some other stuff here. Let's look at net gamma on the day. And what do we got? This is the gamma picture that matters right now. We've got the target down below of 55.40. This would be in the money if we get negative news. So 55.40 is just above the daily trigger in SPX. And then we've got this big bar up here, 56.55. And that's just above that 15-minute downtrend on SPY and SPX, right? And the big boy up here, 5,700, would be the upside target. 5,700 is the prior high on Friday. If we were to hit this and to get more bullish, you would expect this to change, this gamma to change, and also people to roll their options. So implied upside movement today's top is 5,700. We also want to look at the money strike vaults for today. And by the way, this is Gamma Lab stuff. So if you guys know who this guy is, he's pretty cool. He's very smart, intelligent, and I like this guy a lot. And he keeps it simple so that you're not trying to overcomplicate gamma in your life like some people do. We have now this is at the money vol curve for SPX. This shit, depending upon the time frame, is only worth this much right here. This shit will be changed after today, but there is an expectation today that volatility will drop 3 days after today. So we have the high volatility today, and the expectation is within 3 days, volatility will end. If you're looking to get long, it's telling you to look to buy a dip on Monday. And then we'll flatten this. Well, not Monday, but, you know, that we should, like, volatility should kick off, and then we should maybe Vanna squeeze into Monday, I would say. I think it's more into the 16th, though. If we do squeeze, we don't get anything bad in front of us. Next thing I'm going to show you here is CTA positioning. They are buyers right now. They are supportive of the market, so we should expect the daily trigger to hold. What else we got here? Vol control funds. They are limiting volatility as well currently. And then we're also looking at COTs, asset managers nets, asset manager net long short, and they are buyers as well. You can't see it over here, but there's a little hook over here. and they are currently trying to buy the dip. So that's all good to see. Everything seems like it's ready to rock. I misspoke slightly earlier, just a moment ago. So let's look at this from the perspective. I misspoke a little bit about SPX vol curve. Hold on a second here. Bottom right-hand side, SPX. Let's take a look here and see what we can see. Here, one date. And by the way, I don't have any relationship with Gamma Labs or anything like that. They don't pay me shit. I have spoken to the guy a few times. There's a couple things I want to look at here. There's a little bit of a gap down here. Unfilled, right? See a little gap right here, a little bit tiny gap. I always see this like down move swoop. We also know that there's still some resistance here on SPX. We also know that as far as two-day options are concerned, that this looks like top on the day on SPX. Though there is some more gamma higher at 57.50 on a good Jerome Powell. So we'll make that a red. We'll make this a yellow. And we'll make this one a yellow as well. Because we know that if we try to trade above here, there's going to be some rejection here on this 57.50. These are all targets for calls. If we get the bad report to the downside, we think unless we get some kind of really urgent renewed put buying of some kind, that we would slam into this and hold, which is that daily. And how does this what does this mean to you? Like, you're like, Cap, what does this mean, man? I don't know what this means. This means that let's say we blast down here, we get no real doom. You could see a slip, like we close the day out and then we get the vol killer. You start ramping right into the weekend and ramp up into the 16th, right? So this could be a place for you to be hanging out. We also know that if we don't get a really bullish day, let's say we don't have too much of a bullish day, but let's say we go down here, right? Hit our lower thing, right? We start parking it up here, right? We get stopped out here, or even at this 5,700. Then you know where you can buy the dip for the slam higher. There's some places you can be waiting in here, right? Lying in wait on bullish outcomes later into the 16th. And then you also know that you can sell that down there or even higher post 16th. So there's some places here for you to look for inflection points. If you want to post this down here, we're gonna make this yellow right here too. Then we're gonna make this one down below here green. And unless there's something we don't know, that's about it right there, right? If this dip fails down here, we get actual bad news. We know what we're looking for, right? Looking to get back under there to get busy with it to the downside. You know, to be getting, these bears or these bulls were wrong. So you kind of have a range here to hang out as a reaction trader. You want to snip that for yourself to keep at home, you can. You're more than welcome to. And then we'll go back to the main screen here. Get that off my ear. We'll leave this up, and I'm going to take a look really quick at the 10-year. And I'm going to take a peek at Dixie, see if there's any information there. Oh, yeah, baby. Dixie trading 99 cents right now. Dixie weak on higher frames, on lower frames, a little bit of strength. Yep, a little bit of strength in intraday too. Or intraday, a little bit of strength here in Dixie. Oh yeah, man. Dixie dudes telling you we're gonna fucking moon. Dollar down, market's up. That shit's over. Dollar up, market up these days. Dollar looks primed, baby. Woo! Prime, 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 baby. Dixie looks good. Maybe not in the immediately short term, but that shit looks like it looked good. There's Dixie. Let's look at the 10-year. Dixie looking good. Let's do TNX too, couldn't we? Yes. TNX. Well, we got the over-the-shoulder boulder holder on TNX. Some gappage down below. A little bit of counter. Let's check this TNX. Let's see if we can get this to fall in line. Bearishness on TNX. Let's look at it on a 30. Cap can't do that, bro. That shit doesn't work. It does, believe it or not. What this does, doesn't work with your regular shit, but it does work with this shit. Oh, yeah, weak TNX. Oh, yeah, baby. Oh. This TNX up here. TNX looking bullish equities right now. Oh man, you know the pumps there, or the pump for the primer, or the primer for the pump is it's lubed. It really is. Watch it, we go inverse here. I was like, I would love to buy that fucking dip. Love it. And we're gonna start counting out time on the chart. We got 12:30. Start using our rules. You guys all know about the rules here. We go over this in stream day in, day out, till I want to puke. Do it again. 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 1:30, 2 p.m. What are your rules? What are your tools? Do it again. Do it again. But Kappa went the other way. Doesn't matter. Do it again. It works 9 out of 10 times. Works 7 out of 10 times. Do it again. Do it again. Do it again. All right, here we go. Draw some boxes in here for you. Whoop. Little box right there. Make that one green. Follow along at home. Got a little bit quieter. Yep, got one more up here. We're going to check one more thing here. We're almost there. We're almost ready. Got that one right there. They're going to cut you up in here. They're taking all your option money. Got a little bit of that going on right there. We're still in trend. Here, we'll put this on trigger so you can see it. Get your notepads out here, boys and girls. I'm going to list off next some price points of interest. Some traditional charting in here. You guys already know I do the LA Wave thing, though I don't believe in it. It's fucking Racer Gang. I'm going to give you guys some points of interest here. One more second. Whew. So much information. What up, Hims? Hims looks like it's calming down a little bit finally. Let's just check something else out here. If you want some points of interest in the market, some upside targets. Traditional stuff. $561.71, $562.44, $563.91. Big upside target in a day. 570.76. Any kind of rejection. For downside targets. 556.95, 555.65, 553.73, 552.53. What else? What else do I got for you guys here? Last one would be Bookmap. Take a peek at Bookmap and see where supply and demand is. Go over here and kind of let's see what's going on over here. This fucking market wants to explode, duders. Oh, what's that up there? Oh, ooh. Ooh, we'll leave that up. Back to the trigger screen. We're ranging it out, baby. Up and down. Bing, bang, boom, bing, bang. Harlem Globetrotters trading today into typical fucking fashion. Everyone's doing layups. They're like, bro, watch this. Slam dunk. Bro, watch this. Slam dunk. Bro, watch this. Slam dunk. Just note this shit ends as we get closer. They remove the Harlem Globetrotters. They bring in the NBA. As we get closer to we do this shit every fucking FOMC. Like, check this dribbling out, bro. Look how much money I'm making. When I used to not stream, I would trade these, and I would just in the morning, 9:30 in the morning, I'd be fucking stretching out. I'd be like, okay, we're gonna do some 5-minute trades, 4 or 5 of these fuckers before we get to the actual FOMC. They're just so perfect. Down, up. Okay. I think we're there. I think if you've been tuning in since I got on this morning, that's 12:44. So it's taken me 2 hours. I've given you, I think, everything you need to know. Anything that I have not given you, I've either posted in Discord or I've posted in the market brief. I even gave you the audio market brief from Wall Street. Hopefully you listen to that. It gives you some today outlook and further in time outlook. Some stuff that I haven't spoken about on the stream yet today. If you ever want to join us on tradethetrigger.com. As a matter of fact, we we've got something coming down the pike soon, where you lock in the price for a long time or something. I think it's like 20 or 30 bucks a month. I know you guys spend hundreds, if not $1,000 a month for small things. This is for the cost of us, what we do. I think it's 20 bucks. We've got Unusual Whales Probot in there, Tradie Ticks Probot in there. We got a great community. Our community's what makes us who we are. We have some very intelligent traders in there. We've got a quant in there. We've got teachers in there. We've got some really cool stuff. We've got stock traders. We've got currency traders. We've got Globex traders. We've got cash market traders. We've got cryptocurrency traders. We got everybody in there. And so that community, if you ever want to join it, give us a shot. Try us out. TradeTheTrigger.com. You never really hear me say that stuff, but if you ever want to join a community, that's the one to join. In just the loan and that price, the use of those tools in there are awesome. So check it out. See what's up. You get a bunch of other cool shit or whatever, but there's a bunch of other shit. I'm not going to list it all off here today, but it's a really cool community. If you ever want to join us, feel free to do that. I'm going to take a quick break, like 5 minutes, and just ease my throat up. My throat is burning. It's dying over here. I do have one. No, I'll tell that to the membership. I do have one programming note for later in the week, but I've got a family member that needs me over the weekend, so there'll be some travel. There'll be no disruption in coverage nor streams. The only thing you might not see, you might have me more inside the Discord chatting during that time period than seeing my face here on the stream. I'm going to try to remote get on the stream with video, but I don't know if I can or can't. But anyways, I got that going on. That's later in the week. That's like tomorrow and Friday, and then it could bleed out into Monday, Tuesday, depending on how this shit goes. I got to deal with attorneys and doctors and all kinds of stupid shit that I don't want to deal with. So I don't know how this goes. But for right now, what else do we have here? I think that's it. I think I've got everything. Let me just check to see if anyone has any questions inside the Discord before I take a break. And we will have the presser live on this show as well. Hang tight, guys. Important. Hey, one quick second here, guys. What, Class A? There we go, Class A. Hey, perfect. This looks good. Matter of fact, I'll bring this chart up right here for you. This is an old chart of Goog. This looks like it printed just as it should have. You can see it right here. We actually charted Google out. Looks like they bought the dip, ran it up. Gorgeous trade. So we look now for next Google trade. Let's remove all this. Month. Ink tighter, guys. 3 months. 6 months. 12 months. See what we got here. 12-month chart looks great on it. 12-month chart, the high, got the low. 6-month chart. This looks great. 6 month. We know where the buy is here, right? Three-month. Oh, yeah. One month. Give me one quick second here, guys. Let me just check one more thing here. Daily. Weekly looks bad. Daily looks good. Check the 30-minute really quick. SPY squeezing right now. This all looks like rotation to me. Check one more thing. Here. That. Get rid of that. Leave. They're not changing rates. If they changed rates today, it would be a shock. It would most assuredly be a fucking shock. Like, it would be a shock. Watch out, we're coming up into bat wings right now. We're coming into equal highs. Be careful here. Sorry, I'm paying attention to something else. Watch out for the equal highs trade. That's where we like squeeze up, fail, come back down. Come back down into daddy down here. Just be careful of it. There's the equal highs trade. Bat wings, right? Wham, 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 wham. One in 5 minute coming up for the squeeze higher, but just realize that it's there. Let me see. We will do a Fed Watch tool. I don't trust tools. Fed Watch tool. I don't trust it. I don't trust any. I don't trust most of the GAMP. I always feel like any of the not any, but most of the predictors on, especially before we get to an FOMC, like early. I always feel like that's a different trade. Like whenever I hear people saying we're getting cuts, not getting cuts, I think we're trading that in the Fed funds future rate or whatever. Right after we reversed it there, but but it has nothing to do with actual cuts or hikes or pausing. Those are two separate things. So don't ever mix those things up. There's easy ways. There are easier ways to find out if you're getting cuts or not. Just by consuming the data will tell you, even before the future Fed funds rate or bond markets, you can tell just by the data as it comes out. You can tell with like oil when it bottoms and shit. You can tell with you can tell with unemployment rates. You can tell with if there was ever one indicator, I've always told you this, it's unemployment. Unemployment is it. We can talk more about this sometime if you want to know about Fed. We used to talk a lot more about it here. I've gotten away from it recently, but we talked a lot about it in 2022, I think. Yeah, in 2022 we talked a lot about it. We talked a lot about it in 23 too, which is like there are easier ways to find out if we're getting a cut, not getting a cut, how big of a cut, how small of a cut. Do we need a bigger cut? Remember, we got that last big cut. We needed it to arrest the rate of data. No one wants to admit that, but that's true. That's what was done. That's why we did that. It was to arrest the speed and the rate. Some data was going vertical, some was going straight down, and there was a need to arrest that data. There's a blend of it though. There's like, you can simplify that shit. You can't really can like inflation matters, price matters. Inflation matters, unemployment matters, GDP. There's some others too, but like GDP matters. I've got a chart. I have all the macro you need chart. I'll show you. I'll share that again with you guys and how to build it, and I'll write that down. How about this? We'll do a private stream for Goog and for like all the macro you need. And even how to kind of predict that shit in advance. And then you don't have to listen to anybody out there gambling because they're trading it for money. So you don't know if they're caught in it in that trade or not. It's like a whole, like there's like separate markets for this kind of stuff. And as it applies to you as a cash market trader, you can usually fairly easily see, 70% of the time, 90% of the time, before we ever get there. I'm like, oh, they're just gambling over there. We already know we're headed for cuts or no cuts. I mean, there are no one saying rate hikes. I don't hear anybody. Maybe they're out there, but it's not the zeitgeist. I'm like, I could easily see rate hikes this year. Easily. I see them right there. No one's saying that. I could see fucking rate hikes into next year, or even the year after. I could see rate hikes. I could see cuts this year too, and then maybe rate hikes next year. But like all options are on the table with the Fed right now. They can do whatever the fuck they want. They don't have to do shit right now. Fed doesn't have to do a fucking thing. If anything, if I was a Fed official or a Treasury official, I'd get more fucking hawkish. Seriously. You guys are still good right now. If I can keep punching you in the fucking face, I would. You know what I mean? Until you can't take it anymore. That's when you get cuts. When you can't absorb it. You guys are like, I'm dying over here. I'm dying. I got a cut on my face. I'm like, you haven't seen shit yet. Like, bam. And it ain't going to be just them either. The government does this too. You guys don't get corporate, like, all right, so there's this like whole backstory to this stuff. It's like rats on a ship. You're gonna get corporations that want all your money, and then the government is gonna want all your money and the corporation's money, and they try to like remove their like business cycles, right? Economic cycles. They're giving you money to fuck around with, and then they're trying to remove that money. Right? That's tightening. And then they're easing. So we go to a new business cycle where they're like, hey, bro, you need some money? Let me ask you that question. Are we at the ass end of a recession? No. Is this the start of a new cycle? No. Fuck no. This is not the start of a new cycle. Like, we could just start there. Like, you started a baseline of economic cycles. You should. I don't harp on this right now, but Ray Dalio couldn't hit the side of a fucking barn if he begged. In terms of timing, he's one of the worst. Like, he's glaring. He's like Northman Trader. Like, he's bad. But in theory, he's amazing. He simplifies concepts and ideas very well. There's a Ray Dalio video on YouTube. I'm not going to post it right now, but look up economic cycles. He does a wonderful job. Simplify. If you've never taken an economics class in your life, let me see if I can find it. I used to post this frequently. I haven't in a while. I'll post it right now. Hang tight. I'm getting questions right now. Economic cycles. We'll start here. We'll start like right here. Here we go. Most of our people have watched this video 1,000 times. I'm going to post this for you in the Discord. If you're wondering about rate hikes, rate cuts, QT, QE, you start with this. I just posted it for you in the Discord. The link to this. This is like economics for an 8th grader, 6th grade reading level, 3rd grade reading level. You need to understand as an American that theoretically is how our economy works. Now, there's a bunch of other shit that happens, but as a base case, like in theory, that is how our economy is supposed to work. That is how a capitalist system is supposed to work. There are variations of it, but in our economy, theoretically, that's how shit's supposed to work. And before you ever talk about rate hikes, rate cuts, data, economy, business cycles, economic cycles, you got to have a base understanding of what I just posted in there. You have to. And I beg you to watch that video 2 or 3 times. And it is not rocket science. It is fucking crayons. It is like triangle crayons on a table with a lip on the edge. You must understand. Like, if you're going to be a market participant in any way, shape, or form, I don't give a fuck if you're degenerate. You need to have that understanding of how our system works. It is critical for you in life. If you are a worker, if you go to have a job, if you go to college or tech school, if you go to grade school and quit in 8th grade, you must understand that cycle. It is, and they don't teach this in school anymore. I know that. I get it. They barely cover it. Forget even, I mean, it really is like base case. And it answers so many questions where you're like, I don't understand any of this. That's how you do understand the broad strokes of how our economy works in theory. Now, you can get crazy later on and become super bear and say it's all fake this and fake that, or they manipulate, or MMT, all of the crap. But you got to have a base understanding, even if you disagree with it, of how our economy, business cycle, and money works in our country. And it'll demystify so much in your life. Now, do not go down the rabbit hole and listen to Ray Dalio, because that fucking guy, don't. You will blow your whole world up listening to that guy. Timing. But it's a dope ass video, and it's one of the best I've ever seen in simplification. So you start there. And in these economic cycles, the thesis here is that each generation, even if it skips what you think is your generation, they're going to give you a chance, a shot at life. Stop listening to what they say on Reddit. Stop listening. Stop fucking reading work reform. I'm serious. Stop reading work reform. Stop reading like millennial this and my life sucks that and wallowing in your shit and pain. I'm not going to be the pull your bootstraps up guy for you and tell you to go fuck yourself and your avocado toast. I'm going to give you the tools to understand this stuff. And maybe your dad never wanted to tell you this stuff, told you to eat a bag of dicks or something. I'm going to tell you why and how right now. That video will help you succeed in life. You can go to work reform and bitch and moan, but the danger is that you get caught in it. The danger, like you can whine and bitch and moan, that's fine, that's normal. People bitch and moan. Everybody's gonna bitch and moan, and I've got locked out of this, and I get no opportunity with that, and all this other shit. But you don't make that your mantra. It's very important for you to understand economic cycles. And when those opportunities present themselves to you as a fucking adult, then the reason for this is so that you can make it in life. Like, here's my chance. I must take it now. And there's a reason for that, too, because in whatever generation you live in, there's a bunch of people that are not complaining. That's a biggie. Like, if I go on work reform and I'm bitching with a bunch of other people and bots and all that other shit, there's like a whole other group in my generation that aren't in there bitching and moaning. And why? Because they usually caught these things at the right time, and they also made the right decisions. And those people can still bitch and moan if they get caught along the way, but they realize why they're getting caught along the way. On a base case, when money flow is coming into the economy, it's the government creating it. And they're giving you an opportunity. They're saying, here's money. Here's fucking free or cheap money. And you have the opportunity to do the right or wrong thing with it. And you're given a period of time to do the right or wrong thing with that money. And it's usually, it's an economic cycle, right? So I'm young, and it might bypass me. I might not be in the right side of that cycle, right? Well, fuck, I missed it. But maybe I'm now 25 years old, or maybe now I'm 30, and we're coming into that next cycle. Woohoo! I missed it at 18. It wasn't time to right around where I was like ready for it, right? But when it does come, you better be fucking ready for it, right? So that you do get that opportunity, and you usually get those. We run in like these 3 and 5 year cycles. Normally, we got a bigger cycle too, and we're going to talk about that. It's like Ray Dalio shit, but there are these many like business cycles and economic cycles. Matter of fact, in COVID, we had multiple cycles going on. We had a COVID cycle going on and our normal cycle. Even Jerome Powell mentioned it. Literally said, calm down. We just brought 2 different cycles in line with each other. Instead of 2 different waves opposite of each other, they were fighting to get both waves back in line together. And you got to be aware of that stuff as a base case so that you know when that economic opportunity is there for you, so that you can partake in the American dream. The American dream is real. You might not know that because you might be economically illiterate. And that's okay. We're all economically illiterate to some extent, right? I say shit here that someone that's smart goes, he doesn't know what the fuck he's talking about. In my case, it helps me. It works for me. I'm happy with it. Maybe I'll learn more as I get older and not be as illiterate. Maybe I like dumbing shit down. Maybe I already know it, but I don't fucking think it applies to what I want. But most people in this country are fucking basic economically illiterate. They don't teach economics in grade school anymore. They don't teach it in high school. They don't teach it in college even much, or that people don't choose to do it. But what we do today is we skim the internet. We get our news from social media. We get it from news. We get it from fucking Wikipedia. It's like the surface of information. It really is. You got to hit books. You got to go to libraries. You got to talk to people. You got to have mentors in life, adults with wisdom for practical application of this stuff. And as you get older, you have to trust older people, believe it or not. You got to be like, ah, shit. And if you don't, you'll be forced into it as you get older. You'll apologize, or you'll go down even deeper in life. You'll get angry. You'll get resentful. You'll be that guy that's 50, 60, or 70 saying, I want the economy to fucking burn. I already know why some of you want that to happen. You were either economically illiterate, you didn't identify a cycle, or you did all those things. You're like, I got all that cap, but you got washed out. Either from your own poor judgment, through no fault of your own, right? Sometimes bad things happen to good people. They do everything right in life and they still fucking lose. But if you know that that's still a part of this cycle in life in this country, it's not so bad, right? Or you're just mad. Cap, I know all about this stuff, but I still got fucked and I'm angry. But some people don't know. The majority of people don't know. So you start there. Yeah. You can go back and like Ray Dalio's like the grand super cycle is done. Like he said it like fucking 30 times. Burning tires in Manhattan. Going all the way back to the 1980s and shit. Don't listen to that shit from him. Motherfucker's been calling top since fucking 1942. Maybe not that long. Now he does hot yoga and shit and hangs out at Burning Man, does tons of Molly and gets fucking weird. And he's back out there right now. I know. I see him out there. I'm like, oh, God, no, don't do it, Ray. Getting all fucking Patrick from SpongeBob and shit with the incense burning. But you got to start there. It's important. It's like a base case understanding of the economy. Once you understand that basic gist, you can kind of get a feel for where we are in our economic cycle. You can say, is this happening? Is that happening? And like even just highlighting that video, basically what it states is there's expansion and contraction in our economy. There's free money. Basically, the government says to you, hey, I don't know, 18-year-old or 30-year-old, wherever you are in that cycle age-wise, we're going to give you a chance to make a difference in your life. We're going to give you free or cheap money. And it's up to you. You ready? In this time period, it's up to you not to hit a landmine. It's up to you to not squander it. It's up to you to grow that money in some way. And by the way, I'm coming back for it regardless of what you do. Regardless of outcome. If you had hit a landmine or not. If you got struck by lightning, I don't care. If you made bazillions of dollars, I don't care. I'm coming back for that money. You better have invested it and built whatever it is you're building enough that you can withstand when I come back and suck it all back out again. That's when you see companies that survive through a contraction, because some companies don't, even when they were good companies. They don't always survive that contraction. And that's why when you hear people say, like, I invested in my education, we went through a recession, went back to college, right? Or I started a business in a depression, or I started a business in a recession. And you think, what? Everything is horrible, bro. Everybody's telling me it's horrible. And you're the actual guy out there picking up the dead body parts of failed companies. You find someone to lease you I can't afford a mortgage in a commercial real estate space, but this guy's leasing it now for 30% of height of the market, 10%. That guy might even just want a tenant in there, right? So you lease a building. All of a sudden, there's whatever you're doing, left behind equipment. Hey, I'll give you that with a cheap price. I ain't got no money, I only got this. Well, you know what, young whippersnapper, I'm going to give you a chance here, right? And you can come in cheaper. You got no overhead. You got no mortgage. You got no equipment loans. You got some leftover shit from the prior cycle. Before you know it, someone's giving you the good old shot, right? Just like college. And you what? Capitalize. You white knuckle it. You're sleeping on the floor of the landscaping company garage. You're eating fucking rocks and sand. You know, you got some old beat up lawnmowers in there. You're learning now how to crank on lawnmowers. You're not in college, but you're cranking on lawnmowers and shit, some leftover shit from some failed business. Once the lawn mowing contract stopped out there, lawns are being overgrown everywhere. You start with one or two accounts. Before you know it, we go back into an expansion phase, and you've got yourself rooted in that community. 5-10 years later, everybody wants your lawn mowing services. You go through the entire thing again. You're expanding. You're buying shit. You got new trucks. Some people forget that we go through contraction because they're not economically fucking literate. They think they just hit the jackpot or they just did better than somebody else. They had it when someone else didn't. Terminally fucking unique. They don't have a plan for contraction. They don't tighten their belts knowing we're coming into a contraction. But some people do. And they didn't get hit by a landmine or a lightning strike. Their wives didn't leave them, their husbands. They didn't piss their kids off, make them angry all the years, right? And so they survive. Maybe they make the business smaller. They go to the original person. Like, hey, man, I cut your lawn the last fucking 10 years. I need help. I need to get through this cycle. So some people survive this shit, but you as a trader, you and your career, wherever you are, your education, you need to have this base understanding. You like care about like we're going to cut rates, not cut rates, where we're at in the economic cycle, where we're at in the business cycle. That's a basic understanding of how that stuff works. And you can have forethought and planning. You can also understand when bad things do happen to you, why they're happening, and in the worst or best times when they can happen to you. If you fail while we're in expansion phase, try again, right? We're at the ass end of a contraction and into like, try again, jump on that wave. You know, if we're in the top and coming down, maybe it's time to sit back and wait for the fallout and be ready. I'm going to start parking money right now. I need cash. Can't wait till this shit fucking falls apart so I can jump on the next wave. Very important part of life here, because if you get caught in these cycles on the wrong end of them, like you're trying to start a business in the top of the market, we're going to go into contraction, that's bad. You're a bag holder, right? Why did my business fail? I suck. You didn't suck. You just were in the wrong end of a cycle, right? You might not have even sucked. So, it's important. Or I made the wrong decisions. I was out on airplanes snorting cocaine and, I don't know, had 10 dicks in my mouth. And during this big expansion, I loved it. I don't regret it. You know, now we're in a contraction. I know exactly why I'm here and where I'm at, why I'm here. I'm okay with that. I didn't have wife and kids. I just liked, I don't know, whatever in life, right? All the bad stuff. So, to each his own, but be aware. You need to have that awareness of where you are and the dangers for you and the positives for you, why things are easier at times and less easy at times. It's very important. And that can also give you Just a base understanding of, are we in contraction or are we at expansion of the economy? When would you expect the next expansion of the economy? Right? You want bodies in the street. You want to see all your friends getting divorces. You want to see like uncut lawns. You want to see your people you know losing their businesses. How'd that guy lose his business? That guy was lying to me. We were going through a contractionary phase. That guy on the surface, he looked great. He had 2.5 kids, white picket fence, fucking $1 million home. Wife looks gorgeous. Husband looks gorgeous. 2 husbands look great. And that's when you lift the skirt up. And there's different arguments on that too. Some people say, I'm riding that up. I'm going to enjoy it. I'm going to enjoy the ride. I'm good in the background. I'll be fine. Some people are not so fine, though, are they? And they lose everything. Some people choose to be prudent through all of those cycles, right? Makes me think of the Oracle of Omaha, right? Prudence even in upswings, be able to weather and withstand the contractionary phases. Look at that doom right there. Sellers coming in right now. All right, it's 1:35. Give me like 5 minutes. I just got to go potty. I've been pounding water for my voice and coffee. I just need 5 seconds. We're setting up right now, watching a hedge come into the markets. We're going to have the FOMC here coming up in the next half an hour. Looks like the market's now pausing. Anticipating the FOMC release. I will have the news squawker on here in just a moment for you as I take a quick break. I just turned it on. And I will have also Jerome Powell live on this show. Not live with me, but if you guys want to take a bets on what he's wearing for a tie today, is it purple? Is it green? Is it red? Is it yellow? I'll go with. He's been sticking with the purple recently. Plus, we get the Pope and all that kind of stuff. Probably. I don't think he's Catholic, but the Pope. Maybe the Pope was. The purple is usually a sign of neutrality. So let's look at FOMC events. Hold on, make sure I got this right here. Make sure I'm not behind the curve on this. We got the meeting. Nope. No. I gotta go pee, man, really bad. Oh, nope. They always catch me with that. Let's catch me with that that music. You start there, and then what I'll do is I'll do a private stream for you, and we will go over like all the macro stuff you need to know, all the macro that you need, and that video will piece together there we go. I got it. The presser, baby.
Operating.
Uh-oh, I got to mute that really quick. We got the Fed Reserve live here. All right, I got our presser ready to rock. I got to go pee. I'll be right back. Give me like 2 minutes here. You guys can chat this up. Place your bets here. Get the chat up for everybody to be watching out there in real world time. You guys can make your bets here on the open chat. I'll be right back.
So JP Morgan global head of fixed income, Michelle. It says a pretty low risk that the Fed gets important policies wrong. Pakistan Defense Minister to Geo News says we will only hit military targets, not civilian, in retaliation. So keep in mind, Trump is currently live. He's speaking at the swearing-in ceremony for the Chinese ambassador. We have got the live video on the feed for those interested. Again, he is currently speaking.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
All right, I was fast there. All right, here, hold on a second here. My ears are popping. You guys want to trade some fucking zero dates in the Discord? Keep getting asked for zero date callouts in the Discord. Okay, we'll trade some zero dates together. You guys wanted to degen it here today? All right, give me a minute here. I got to do one quick thing. I gotta get into a admin chat really quick.
So JP Morgan's head of FX, Michelle, says large institutions don't see the sell America trade.
What's up, brother? What's up, Joey Donut? Oh, what is this? Oh, yeah, I like that. All right, what are we doing here? I got to go back to the main chat. I got to go back in here with my degenerate friends because we're getting ready to rock and roll here. All right, let's do some degenning here. Hold on, put this over here. We're going to do some degenning today, aren't we? Hold on, boys. Where do I put this? I got to put this somewhere. Yeah, cut that. Get rid of that. Put this over here. Get rid of that. We don't need that anymore. Need this, though. I got to get primed and lubed up here. My throat is banging. Leroy Jenkins. All right, let's take a look at the degen stuff. Remember, I just typed in degen, not my fucking brokerage. Remember some rules. We make moves fast, don't we? Remember, if you're doing any directional trades today, if you're doing the degenerate thing, just remember, whatever you're going to get in, they're either going to fucking zero or your diamond hand. Inflection points are key. And then market orders to get in and out quick are key. And make sure you're out before a potential reversal. And it's okay to take the money and run. You don't need a fucking 5,000% banger. You know, most people will go a whole year with 20%. And that's not good enough for you. So let's have a look-see here.
So just keep in mind we are now 15 minutes away from the top of the hour, where we are expecting the US interest rate decision alongside the FOMC rate statement.
Expiring today.
Nations expect the Fed to remain on hold today, keeping rates unchanged at 4.5%. So just going over some commentary. Trump says US envoy to China is to handle the consequential and complex issue. So again, Trump currently speaking.
Oh, why the fuck is he trying to take the thunder?
The FOMC rate decision today. SocGen say the FOMC meeting is a key focus this week. They do not anticipate significant changes in the Fed's messaging compared to the March meeting, though. They say that
565.
Trump says, I'm confident the US envoy to China will do an exceptional job. And so again, we're just looking at some commentary ahead of the FOMC rate decision today then. So start from the top, SocGen say the FOMC meeting is a key focus this week, and they do not anticipate significant changes in the Fed's messaging compared to the March meeting. They do say that while growth expectations may have declined due to increased tariffs, economic growth and consumer spending are on the rise. Overall, risks remain high, with potential downside for growth and upside for inflation. So also ahead of the FOMC, looking at a note from UniCredit, they say that the FOMC is expected to keep its target rate for the Fed funds rate at 4.5% at the end of its two-day meeting on 7th of May, in line with market expectations. UniCredit note that since the March meeting, the Trump administration introduced significantly higher reciprocal tariffs on the 2nd of April, with some tariffs paused for 90 days and retaliatory tariffs on China. Trump says, I don't know on tariff exemptions. Trump says, we'll take a look at exemptions. So I'm going to put the prep for the FOMC on hold as we've got Trump at the podium. So for pro users, we do have the US interest rate prep on the right-hand side of the website there. You can read through it yourselves if you are interested in that. Trump says, not looking for so many tariff exemptions. Trump, on mulling tariff exemptions for some items, says, I don't know.
This is the original move right here from this morning down here. There's an original move here at 12:30, and there's another move right here at 11:15. This is the bottom side of that move right there.
Trump, when asked about tariff exemptions for baby items, says, "I don't know."
Trump's trying to steal glory today. Is that what he's doing? Trump never misses an opportunity, right?
In 10 minutes time now, at the top of the hour, we see the US interest rate decision. Forecast sees the rate remaining unchanged at 4.5%. We also get the FOMC rate statement.
Trump never misses an opportunity, does he? Steal the fucking I did that. He's the biggest I did that out there. Trump's out there right now. Oh no, he's got if we're going up, he's gonna be there. Well, I guess up or down, he's gonna be there, right? To blame Jerome.
Talk about Gaza right now. Trump says we'll know something in the next 24 hours.
Oh, there's the teaser. We'll know something in the next 24 hours.
Trump on India-Pakistan says, want to see them work it out. Says, hopefully they can stop now.
So Trump on baby items, I'm assuming that's de minimis. He's saying in the next 24 hours you're going to get an answer.
If I can help, I'll be there.
Oh. Uh-oh. Let's make this bigger here.
Trump on a possible Middle East ceasefire, to clarify, says, you'll know in 24 hours. Again, Trump on possible Mideast ceasefire, you'll know in 24 hours. Seeing some weakness in WTI crude following that.
Middle East ceasefire.
Trump says not open to pulling back 145% tariffs. Again, Trump not open to pulling back 145% tariffs. Some weakness in the S&P 500.
It's actually higher than that. It's like I think it's at
no to potential for pulling back tariffs on China. Again, Trump says no to the potential for pulling back tariffs on China.
We've got Trump talking about
again, weakness in the S&P.
It's actually higher than that.
Index here, as Trump says no to the potential for pulling back tariffs on China.
Dude, is financial just trying to crash the market? Let me say it to you again. We tell you again, no.
Protect your trades from
Oh yeah, baby.
Financial Juice Pro. Now only $99 a year for our real-time service.
Seven minutes left until we get the Fed official statement, policy statement.
Trump on the US position on Iran enrichment says no decision made yet. Again, some weakness in WTI crude coming here as Trump speaks as well. Trump says had a good outcome with Houthis. Trump says might be easing chip policy toward the Gulf. So the S&P 500 again quickly pairs gains after Trump comments.
And that was going to happen more than likely anyways. That's why we got the green bars down there. We were either going to squeeze or we were going to give up the entire day regardless.
Who asked for a meeting? Five minutes now to the top of the hour, where we get the US rate decision and the FOMC rate statement. With the rate decision, forecast sees the rate remaining unchanged at 4.5%, alongside market pricing. So Trump ends remarks to reporters after the swearing-in ceremony. Close call.
Thank you, Financial Juice. Appreciate it. Financial Juice, if you're watching right now, can you say something? Be like, what's up, dog? Like, we ain't watching you. Like, go fuck yourself. I bet if we had the other, this is the regular guy. I bet if we had the intern, he would say something. The intern's definitely not working the FOMC. Yeah, come on. Come on. Four minutes left. Trump shit talking China. China should reassess who asked for the meeting. China's like, we didn't ask for shit. We didn't ask for anything. You know who asked for that meeting. That was the US that asked for that meeting. 100%. China has no need to ask for that meeting. Zero. There is no benefit to China asking for that meeting, especially if you look at their export volume last month. If you look at the actual data, they don't have to do anything right now. Not a word. This is all bluster. And when you watch Bookmap over here, you'll see all this will turn nice and black. You'll see that screen turn black. Means risk off moment in the market.
So again, Newswire just summarizing Trump here saying
there is a bear plane up here.
Lower tariffs to get China to the table.
There is a bear plane right here. On the 1 and 5 minute. If we got a cut, I would shit. That would be a huge outlier. There's like a 0% chance of one. You'd see Trump on the horn in like 2 seconds. He'd be fucking pumped. Probably rip his shirt off, and that'd be kind of gross.
So 1 minute remaining now for the US interest rate decision.
1 minute left. Place your bets, boys and girls. You can place them in the chat if you want. Cut, no cut, hike. I'm going with no cut. You want to know? No cut, no hike, just same as usual. We'll look to see what the verbiage says in the official statement. Was any change, hawkish or dovish tone here? I think you're going to get a tone of slightly more dovish than hawkish. Not, I don't know if it's quite dovish, but more in line with the. I think the China thing is big. The meeting, or at least from the Fed's perspective, it's it's like very small progress.
No change, no change. Rate remains unchanged at 4.5% as expected. Looking to the statement now, the committee judges risks of higher unemployment and higher inflation have risen. Economic activity has continued to expand at a solid pace despite swings in net exports affecting the data. The committee judges risks, again, to unemployment and inflation have risen. The Fed committee will continue reducing holdings of Treasury and MBS securities at the current pace.
That's good.
The unemployment rate has stabilized at a low level. Labor market conditions remain solid.
It's all good.
Fed vote in favor of policy was unanimous.
You don't want to hear that they're going to increase their QT. That's good to hear.
Some of the key points and changes in the statement then. Risks of higher unemployment and higher inflation have risen. Uncertainty about the outlook has increased further.
I would say that's not good. You want to hear that there's progress made in talks, but we're not getting that in that statement. And that is true that as time passes, if there is not any progress in talks, that conditions would continue to improve and become even more, what would you call it there, punitive.
Yield steady after the Fed rate decision and the statement.
Yields dropping, that's inaccurate. That's an inaccurate statement. 10 years dropping right now.
Gold little changed as well following the Fed decision. Short-term interest rate futures slightly pair earlier losses after the Fed stands pat on policy rate.
HYG, I'm not looking at the 3 and 6 month. I should be, but I'm not. Too much shit to look at.
We have posted out the FOMC rate statement on the feed for those interested.
HYG reacting positively right now. TNX yields dropping. That's good.
We did see a little bit of strength come through in the S&P 500. Bit of weakness come through in the dollar following the FOMC decision there, where they noted that risks of higher unemployment and higher inflation.
Dixie's still holding.
Traders continue to see the Fed rate cuts likely by July.
Here's the statement. I'll read through it right now.
Traders also still price in 3 Fed rate cuts this year.
Woo, 3 rate cuts. Dot plotting it, baby. We got to price that shit in, don't we? Fed statement. I know they're not cutting. I do like the gamble, though. We're still pressing in 3 rate cuts, boys and girls. Here's the carrot. Not much movement here at this point, so we're not getting a ton of movement. We are holding so far. HYG back and forth bouncing around here. It is holding its hourly trigger right now, which is good to see. Dixie still on support. Nothing really too negative yet on Dixie. 10-year weak. Very small reaction right now in SPOOs. Not seeing a ton of up or down. We usually get some kind of reaction here.
And cooperation with Putin. Korea did report earlier that China's President Xi has landed in Russia.
Remember that is bad for markets.
U.S. Treasury 2 to 10 year
If they make an
marginally
announcement.
flattened following the Fed decision, last at 48.4 basis points.
Series of higher lows on SPOOs right now. Remember, though, we still have sellers above here, right up here. They're trying to sell us down. Watch this green bar right here. This one is more important than this one. This is the important one right here. Don't want to see this one break. Want to see this hold and a move higher. This green bar here was the morning low.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Use Pro
TNX blooding right now.
service for the price of 1 month and save 92%.
Dixie coming into support at 99.47. SPOO's looking to the downside now. We've got a bear plane above.
500 following the Fed decision have now been reversed.
New low just now
1% now.
on the day.
Extending losses or pairing gains even as close to flat on the session now. So the S&P 500 and Nasdaq 100 both fall to session lows. US 2 to 10 year yields extend declines as well, reaching the day's low also.
SPY trading S1. Dixie trading support.
So just remember as well, at the bottom of the hour, we do see the FOMC press conference with Fed's Chair Powell as well. It's just over 20 minutes time.
Dixie week, HYG week right now, closing the gap down below. One more gap down below to close on HYG at 78.32. SPX sitting on gamma, or almost that gamma here at 55. What am I missing here? Come on, baby. No movement right now. Just so you know, we're just above the put wall here. Right here, so you can see it. Oh, so you guys can see it over here. No movement here that I can see. The VIX coming up to trade that daily trigger. Watch out for one more spike to the downside. This is VIX 9-day right here. Intraday put wall right here, so you can see it. HYG trying to close the gap lower at 78.32. $14 minutes left until we get the presser.
US stocks extend their fall, with the Nasdaq now down 1%.
Implied move 1.1% in the day. Be careful of either squeeze here or a quick rip or dip and rip to the upside. We're ready to start squeezing. Very, very close to a squeeze. Hourly being sucked up right now. Lots of buyers on the hourly candle. Have two more lower targets. 555.74 and 553.57. Right down in here.
So according to the Washington Post, the US
Here and here. We're really close here. Really close. Time or money? $11 minutes left until the presser.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
In 10 minutes' time now, at the bottom of the hour, we do get the FOMC press conference with Chair Powell. The live video is on the feed for those interested.
There. A little bit lower. No, it's higher than that too. I was going to get rid of that because that's not where it's at. Two. Still risk to the downside here before we get to this. Still downside risk to take all this stuff out right here. Careful of one more leg. Eight minutes until briefing. Oh, wait a minute. Mute that. Move this up. Make that larger up there.
So we have posted the Washington Post piece on the feed as the US pushes nations facing tariffs to approve Musk's Starlink. That's on the feed now. Deutsche Bank's Luzetti says substantially lowering June rate probabilities.
Watch that red bar coming in on Bookmap over there. Have the Fed presser in the bottom left-hand side of your screen. Six minutes left. Time or money, baby. If they're going to knife it, this is the time. This is their only chance left to knife it down. They don't have a lot of time left here.
In 5 minutes' time now, at the bottom of the hour, we see the start of the FOMC press conference with Chair Powell. Videos on the feed. Seeing another comment from Deutsche Bank's Luzetti says, I see the first rate cut in December.
A note here that the half-hour trigger on SPX is attempting to cross the daily trigger right now. It's already crossed on SPOOs, but not on SPX. When I watch this down below here. Also note that at the end of the press conference, your local bears come out. You'll start to see people that are like fourth string reporters asking the dumb questions. You'll also expect questions about the China meeting, and if there's any commentary on that. When Jerome speaks, I'm going to mute the news squawker. SPY recovering right now. Ongoing, baby. New high here. We should trade this next.
1 minute to go now till we get the FOMC press conference.
Still not seeing the
video
feed.
is on the feed for you to watch.
Yeah, I'm still not seeing that feed. Same feed as I have up here. Still no feed. Here we go. Purple tie or no? Still no audio.
Good afternoon.
Purple tie.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite heightened uncertainty, the economy is still in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has come down a great deal, but has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Pardon me. Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter, reflecting swings in net exports that were likely driven by businesses bringing in imports ahead of potential tariffs. This unusual swing complicated GDP measurement last quarter. Private domestic final purchases, or PDFP, which excludes net exports, inventory investment, and government spending, grew at a solid 3% rate in the first quarter, the same as last year's pace. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a sharp
First target hit.
and elevated uncertainty about the economic outlook,
First target's been hit.
reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In the labor market, conditions have remained solid. Payroll job gains averaged 155,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices rose 2.3% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up, as reflected in both market and survey-based measures. Survey respondents, including consumers, businesses, and professional forecasters, point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of the balance sheet. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. The tariff
Second target just got tapped.
significantly larger than anticipated. All of these policies are still evolving, however, and their effects on the economy remain highly uncertain. As economic conditions evolve, we'll continue to determine the appropriate stance of monetary policy based on the incoming data, the outlook, and the balance of risks. If the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in unemployment. the effects on inflation could be short-lived, reflecting a one-time shift in the price level. It is also possible that the inflationary effects could instead be more persistent. Avoiding that outcome.
That's the one-time hit from tariffs.
On how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored.
We talked about that in yesterday's show.
Keep longer-term inflation
Does it
expectations.
stay persistent or not?
One-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we'll balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we're well positioned to wait for greater clarity before considering any adjustments to our policy stance.
Bullplane forming on SPOOs.
The committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on inflation dynamics and the implications for our monetary policy strategy. Our review includes outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference next week. Throughout this process, we're open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking my question. A lot has happened since the last meeting. There's been tariffs put on, tariffs taken off, and meanwhile, there's a bill advancing in Congress. And I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Remember that the only tariffs implemented now are in de minimis. That's it.
As we noted in our statement, post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out. And also, when they do settle out, what will be the implications for the economy?
That's a change in verbiage.
So, I mean, ultimately,
that's actually good, not bad.
In a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think if you look at where we are today, we have an economy that, if you look through, the sort of distortions in Q1 GDP, you've still got an economy that looks like it's growing at a solid pace. The labor market appears to be solid. Inflation is running just a bit above 2%. So it's an economy that's been resilient and is in good shape.
Resilient economy, resilient consumer.
Or moderately restrictive. It's 100 basis points less restrictive than it was last fall. And so we think that leaves us in a good place to wait and see. We don't think we need to be in a hurry. We think we can be patient. We're going to be watching the data. The data may move quickly or slowly, but we do think we're in a good position where we are to let things evolve and become clearer in terms of what should be the monetary policy response.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's naturally a lot of PTSD around 2021 and supply shocks, but there are some who argue that the current situation has notable differences. Energy costs are down, housing imbalances look nothing like they did 4 years ago.
Nope.
Labor Demand appears to be
different.
actually cooling with wage growth
Not the same as COVID. We talked about that earlier today.
right now that could nourish higher inflation beyond a rise in goods prices this year.
I think the underlying inflation picture is good. It's what you see, which is inflation now running a bit above 2%. And we've had basically decent readings in housing services and non-housing services, which is a big part of it. So that part, I think, is moving along well. But there's just so much that we don't know. I think, and we're in a good position to wait and see, is the thing. We don't have to be in a hurry. The economy has been resilient and is doing fairly well. Our policy is well positioned. The costs of waiting to see further are fairly low, we think. So that's what we're doing. And, you know, we'll see. The administration is entering into negotiations with many countries over tariffs. We'll know more with each week and month that goes by where tariffs are going to land, and we'll know what the effects will be when we start to see those things. So we think we'll be learning. I can't tell you how long it will take, but for now it does seem like it's a fairly clear decision for us to wait and see and watch.
So when you say that you don't need to be in a hurry, does that mean that could the outlook change in such a way that a change in your stance could be warranted as soon as your next meeting?
You know, as I said, we are comfortable with our policy stance. We think we're in the right place to wait and see how things evolve. We don't feel like we need to be in a hurry. We feel like it's appropriate to be patient. And you know, when things develop, of course, we have a record of we can move quickly when that's appropriate. But we think right now the appropriate thing to do is to wait and see how things evolve. There's so much uncertainty. If you talk to businesses or market participants or forecasters, everyone is just waiting to see how developments play out, and then we'll be able to make a better assessment of.
He is not giving any kind of quarter to the China discussions with the U.S.
As that develops.
That could be because of the politics of it, too.
John L.
Janelle Marte with Bloomberg. So many.
He did say we'll know more as the White House negotiates tariffs with other nations. That might be a nod to it.
For the Fed to cut rates preemptively given the higher risks for higher inflation. So given the outlook, do you still see a path for a soft landing, and what does that look like?
Well, let me say, I mean, so let's look back and see where we are. So to go through 2024 up to the day, we've had you know, unemployment in the low fours for more than a year. We've had inflation coming down in the.
This is a gotcha question.
We've had an economy growing at 2.5%. So that is the economy as we see it now. What looks likely, given the scope and scale of the tariffs, is that we will see certainly the risks to higher inflation, higher unemployment have increased. And if that's what we do see, if the tariffs are ultimately put in place at those levels, which we don't know, then we won't see further progress toward our goals. But we might see a delay in that. I think in our thinking, we never do anything but keep achieving those goals. But we would, at least for the next, let's say, year, we would not be making progress toward those goals. Again, if that's the way the tariffs shake out. The thing
By recovering all of its losses?
Uncertainty about the scale, scope, timing, and persistence of the tariffs. So that's that. In terms of preemption, you know, I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive. If anything, it was a little late. But 2019, we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now. And we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've also got you know, forecasts of weakening in the economy.
We're going to know if we're going higher here. If you look closely, there's a red bar or a red 5-minute trigger here. We're going to back test this cross.
Recession is, but in any
We also love to do a liquidation break. Take your stops here.
what the right response to
You'll often see market get weak on the cross, swoop lower, then back up.
Colby Smith with the New York Times. How much weakness does the committee need to see, though, in the labor market and the economy more broadly to...
A fuck ton more.
Is it about a certain increase in the unemployment rate?
And it's not even the price, really. It's the rate of the rise.
Negative monthly job reports.
So it's price, or it's not price. It's
so first
the
of all,
rate of unemployment and the
good participation,
velocity of
wages behaving very
up
well.
that matters.
Participation, I mentioned it at a good level. So, with the labor market, we would look at the totality of the data. We'd look at the level of the unemployment rate. We'd look at the speed with which it's changing.
Speed with which it's changing, velocity.
Huge array of labor market data to get a sense of whether conditions are really deteriorating or not. And at the same
We'll go over that in the private stream.
be in a position of having to balance those two things, which is, of course, a difficult balancing judgment that we'd have to make.
On that point about balancing, I mean, you
Watch out for this big liquidation break here.
how far the economy is from each goal and the time it would take to kind of get back to that point. But what does that mean in practice? I mean, how much of that assessment will be rooted in a forecast versus data dependence?
It would be a combination of the two. I mean, let's just say this would be a complicated and challenging judgment that we would have to make. Yeah, we're not in this situation, but the situation is if the two goals are in tension, so let's say that unemployment is moving up in an uncomfortable way, and so is inflation. Not the situation we're in, hypothetically, but we would look at how far they are from the goals, how far they're expected to be from the goals, what's the expected time to get back to their goals. We'd look at all those things and make a difficult judgment, and that's in our framework. It's always been in our thinking. We haven't faced that question in a very long time. So again, difficult judgment to make, and not one that we face today, and we may never face it, but we have to be keeping it in our thinking now.
Edward.
Thank you. Edward Lawrence with Fox Business. So we had the CPI report that came out that showed month over month the first decrease in inflation in about 3 years. The jobs report, you said, solid, that we saw. At the same time, we have those new tariffs that we're living under. So
No, we don't.
should the Federal Reserve be cutting rates at all this year?
I wish we did. I wish we were living under those tariffs right now, but we're not.
I think you have to just take a step back and realize this is why we are where we are, is, we're going to need to see how this evolves. There are cases in which it would be appropriate for us to cut rates this year. There are cases in which it wouldn't. And
We do not live under those tariffs. If you think that we do,
and what
you're going to see shit fucking go moon in price if we do.
inflation, I couldn't confidently say that I know what the appropriate path will be.
This is an important inflection point right here. If we see a new low,
President Trump calling on you personally as well as the Federal Reserve.
we are going to rain hell down here.
Decision today and affect your job difficulty.
Doesn't affect our doing our job at all. So we're always going to do the same thing, which is we're going to use our tools to foster maximum employment and price stability for the benefit of the American people. We're always going to consider only the economic data, the outlook, the balance of risks, and that's it. That's all we're going to consider. So it really doesn't affect either our job or the way we do it.
Howard.
Hi, Howard Schneider with Reuters, and thanks for the time. I'm wondering, I mean, given the complexity about the first quarter GDP and what lies ahead, I'm just wondering what your intuition tells you about the underlying direction of the economy right now. Many of your colleagues have said they feel growth is slowing. If so, do you have any sense of by how much, to what degree the slowdown may be? What does your gut tell you about how things are evolving out there?
My gut tells me that uncertainty about the path of the economy is extremely elevated, and that the downside risks have increased. The risk is, as we pointed out in our statement,
SPY breaking new low here. Target downside 553.30.
But they haven't materialized yet. They really have. They're not in the data yet. So that tells me more than by intuition, because I think it's obvious, actually, that the right thing for us to do is we're in a good place.
Just need to close out bulls here. Be a minute.
The right thing to do is await further clarity. And there's usually things clarify and the appropriate direction becomes clear. That's what usually happens. Right now, it's very hard to say what that would be. In the meantime, the economy is doing fine. Our policy isn't, it's not highly restrictive. It's somewhat restrictive. It's 100 basis points less restrictive than it was in, last summer. So we think it's in a good place, and we think the appropriate thing is for us to wait and see and get more clarity about the direction of the economy.
Well, let me press you on this idea of the economy being fine right now, because reading the Beige Book very closely the last time around, there was a lot of negative stuff, negative sentiment that was in there. And I know that everybody's looking at soft data right now. You mentioned it yourself that the sentiment's sour. But the Beige Book...
The data is not soft.
Beginnings of layoffs in some industries, prices rising in some places, and an awful lot of investment decisions being pushed to the side.
Sentiment is shitter, though.
Point to a slowdown?
It may well. It just hasn't shown up yet. And we all look at all these sentiment and read many individual comments just to get a better feel. And businesses and households very broadly are concerned and postponing economic decisions of various kinds. And yes, if that continues and nothing happens to sort of alleviate those concerns, then you would expect that to begin to show up in economic data. It wouldn't maybe show up overnight, but it would show up over weeks and months. And that may be what happens, but it hadn't happened yet. And also, there are things that can happen that will...
Bulls looking weak here.
I mean, they haven't happened, but it's possible to imagine things that... But in the meantime, yes, we're watching it extremely carefully, like everyone is, but don't see really much evidence of it in actual economic data yet. And by the way, consumers keep spending, credit card spending. It's, it's still a healthy economy, albeit one that is shrouded in some very downbeat sentiment on the part of...
Yep, shrouded in sentiment, but not in data. There is no downbeat data here, none, zero.
Michael McKee from Bloomberg Radio and Television.
That reporter is speaking from a sentiment perspective, that's it.
Mission creep. You take on more problems, use more tools, and then end up building tools to deal with the fallout of those tools, which then makes it a given that you will act more aggressively in the future. Is that a fair critique, and is that something you would be looking at in your framework review?
Sorry, say the critique again.
That the Fed has been involved in mission creep, gets involved in using too many new tools to deal with problems and to go too far. Is that something that the critique was based around the fact that you did QE and QE and QE and went beyond the narrow confines of your mandate?
So, well, I mean, there are a couple. That's not really beyond the confines of our mandate. Look, I would say this: we did things. Essentially, we're on an emergency footing for a couple of years in the pandemic, and it's very fair and very welcome for people to look back over what we did and say, "Hey, you could have done this better and different." And one thing we hear:
Bulls trying to fight their way back again. Still haven't lost it yet.
I think we were explaining it in real time.
Almost, though. Door's shutting right here.
We could have explained it better. There's a lot of thinking that we went on too long with QE. I can tell you that the reason we did was we were concerned that we didn't want a sharp tightening in financial conditions at a time when we thought the economy was still vulnerable. And so we did hold on for a long time to QE, and we, of course, tapered and everything. And then we immediately went into QT, and, we're down a couple of trillion. But I get we certainly, with the benefit of hindsight, could have tapered earlier or faster. That's absolutely right. But this is all very welcome. We knew doing this in real time that we weren't going to get it perfect, and those kind of
Buyers trying to fight their way back right now.
Kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as climate change and trying to ensure that certain groups are benefited by your economic policies in terms of employment, et cetera.
Still valid to the downside.
Climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that you know we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And you know, we dropped out of the network for greening the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And you know, the risk is if you go for things that are really not on your mandate, you know, then why are you independent?
Downsides trade still valid.
That's a very fair question. I do think we've done a whole lot less on climate than some people seem to think we did.
Would need to see the squeeze above, make it invalid, turn up.
Unemployment rates down for specific categories.
We didn't do that. You know, what we said was that we never targeted any unemployment rate for individual racial or demographic groups. What we said was that maximum employment was a broad and inclusive goal. And I think what we meant by that was we're going to consider the totality of the country as we look at our maximum employment goal. Of course, we were never going to target any individual group with that, but I think some people, you know, wanted to hear it that way, but that's not at all what we meant. So that's just not a correct reading of our. But I can see how, you know, maybe people found that confusing, and you know, we have to take that into consideration.
Jolene.
Whoa.
Hi, Chair Powell. Thanks for taking our questions today. I'm Jolene Kent with CBS.
That's out now.
You've said wait and see, and the economy is doing fine today, but the impact of tariffs are already showing up. At the
new high.
Businesses, big and small, are telling us that they feel it, and most importantly, consumers say they feel it, that the challenges are here, and there's no waiting and seeing. For Main Street, what is the breaking point? What would have to happen to prompt a rate cut specifically?
Well, you know, so we really don't see in the data yet big economic effects. We see sentiment, there are concerns that higher prices may be coming or things like that. So they're worried now about inflation. They're worried about the, you know, a shock from the tariffs, but they really haven't. That shock hasn't hit yet. Okay, so you know.
Thank you. Say it. It has not hit yet. Tariff shock has not hit yet.
As
these fucking reporters, man.
Remember,
oh man, I'm already writing something about all this right now in the background.
Economic activity, which translates into higher unemployment, and the other would be potentially higher inflation. Again, to say it again, the timing, the scope, the scale, and the persistence of those effects are very, very uncertain. So it's not at all clear what the appropriate response for monetary policy is at this time. And and by the way, our policy is in a good place, so we think we can wait and move when it is clear what the right thing to do is. Really not at all clear what it is we should do. So people are feeling stress and concern, but unemployment hasn't gone up. Job creation is fine. Wages are in good shape. You know, people are not people are not getting laid off at high levels. You know, initial claims for unemployment are not increasing, you know, in any kind of impressive way. So the economy itself is still, you know, in solid shape.
Just a quick follow-up. President Trump now says he does not plan to remove you as chair. When you heard that, what did you think?
I don't have anything more for you on that. I've pretty much covered that issue. Thank you.
Chris.
Hi, thank you. Chris Rugaber, Associated Press. Well, I just wanted to follow up. Earlier, it sounded like you said it was unclear how the Fed, what kind of interest rate decisions you will make later this year. So does that, in March, there was guidance that 2 cuts might happen. 2 cuts were penciled in for this year. Is that now, that guidance from the last press conference, has that been overtaken by events at this point?
We don't do a summary of economic projections at every meeting, as you know. We do it every other meeting, and so this was the meeting when we didn't do it. And we don't also kind of poll people, so I really wouldn't want to try to make a specific projection for where we are relative to that. We will, in 6 weeks, we had the June meeting, and you'll have another SEP. I'm not going to hazard a guess here today as to what it would be. Again, what I would say is that we think our policy rate is in a good place. We think it leaves us well positioned to respond in a timely way to potential developments. That's where we are. And that, depending on the way things play out, that could include rate cuts. It could include us holding where we are. We just are going to need to see, how things play out before we make those decisions.
Great. And just to follow up on that, I mean, when you address the issue of how the Fed would handle both rising unemployment and rising inflation, how are you thinking about the fact that addressing one could exacerbate the other? So a rate cut to reduce unemployment could worsen inflation and vice versa. How do you handle those challenges?
You just captured this is the issue with the 2 goals being in tension. It's a very challenging question. Now, there can be a case in which one goal is very far, one variable is very, very far from its goal, much farther than the other, and if so, you concentrate on that one. And frankly, that was the case. Well, it wasn't a case where they were really in tension, but if you go back to 2022, it was very clear that we needed to focus on inflation. The labor market was also super tight, so it wasn't really a trade-off. I think what our framework document says. It says we'll look at how far each variable is from its goal, and also we'll factor in the time it would take to get there. So, that's going to be potentially a very difficult judgment, but the data could break in a way that it's not. I just don't think we know that. The data could easily favor one or the other, and right now there's no need to make a choice, and no real basis for doing so.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We don't give Congress fiscal advice. We take what they do as a given, and we put it in our models and in our assessment of the economy. So I wouldn't want to, speculate on that. I mean, I think we do know that the debt is on an unsustainable level, on an unsustainable path, not at an unsustainable level, but an unsustainable path. And it's on Congress to figure out how to get us back on a sustainable path. And it's not up to us to give them advice.
Well, do you think that they should take macroeconomic conditions into account as they look at this?
I think they don't need my advice and our advice on how to do fiscal policy any more than we need their advice on monetary policy.
Andrew.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. In your Jackson Hole comments last year, you said you would not welcome further cooling in labor market conditions. The unemployment rate then was 4.2%, which is what it is now. Many forecasters now predict a higher jobless rate. How has your tolerance for weakening labor market conditions changed compared to a year ago?
So it was quite a different situation. What was happening last year is that over the space of 6, 8, 7 months, the unemployment rate went up by almost a full percentage point. And it was click, 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 click each month. And everywhere people were talking about downside risk to the labor market. At the same time, payroll job numbers were getting softer and softer. So there was a really obvious concern about downside risk to the labor market. And so at Jackson Hole and then in September, we wanted to address that forthrightly. We wanted to show that we were there for we'd been there for inflation for a couple of years, and we wanted to show also that we're there for the labor market. And it was important that we send that signal. Fortunately, since then, the labor market has really, and the unemployment rate have really been moving sideways at a level that is, well in the range of mainstream estimates of maximum employment. So that concern has gotten a lot less. So, you're at 4.2% unemployment. I think we were in a very different situation. Now we have a situation where, the risks to higher inflation and higher unemployment have both gone up, as we noted in our statement, and we've got to monitor both of those. We actually have a potential situation where there may be a trade-off or tension between the two, potentially. We don't have it yet, and we may not have it, but that's what we have, and that's why I think it's a very different situation.
I guess I want to follow up by asking how much of a rise in the jobless rate you could tolerate.
Yeah, I can't give you I'm not going to try to give you a specific number. I'll just say we have to now be looking at both variables and which of them is demanding. If one of them is demanding our focus more than the other, that would tell us what to do with policy. If they're more or less, equally distant and equally or not distant, then we don't have to make that assessment. The assessment is you wait. So I'm not going to try to be really specific about what we need to see in terms of a number. But if we did see significant deterioration in the labor market, of course that's one of our two variables, and we would look to be able to support that. You'd hope that it wasn't also coming at a time when inflation was getting very bad. And again, we're speculating here. We don't know this. We don't know any of these things. It's very hypothetical. We're just going to have to wait and see how it plays out.
Thanks.
Claire Jones, Financial Times. In terms of getting some clarity, we've got some talks at the weekend in Geneva between the US and China. A lot of economists are attaching an awful lot of importance to what we hear from those talks. How much importance are you attaching to them in terms of judging what will happen to the US economy going forward? And just in a similar vein, some economists are saying it's days, not weeks, that we have until we start to put the US economy at risk of seeing the sort of pandemic-era shortages and higher prices if we don't kind of soothe relations.
This usually wraps up at 3:40 at the latest.
These are not talks that we're in any way involved in, so I really can't comment directly on them. But what I will say is this,
This is when the questions become kind of bullshit.
The public generally had an assessment of where tariffs were going, and then April 2 happened, and it was really substantially larger than anticipated in the forecasts that I had seen and in our forecasts. So, and now we have we're in a new phase where it seems to be we're entering a new phase where the administration is beginning talks with a number of our important trading partners, and that has the potential to change the picture materially or not. And so I think it's going to be very important how that shakes out. But we simply have to wait and see how it works out. It certainly could change the picture, and we're mindful of not trying to make conclusive judgments about what will happen at a time when the facts are changing.
And just on the fall in shipping volumes from China over these tensions, do you share that concern that we could start seeing goods shortages and higher prices in the coming weeks if this isn't resolved very quickly?
I don't want to get we shouldn't be involved even verbally in the questions about the timing of these things. Yes, of course we follow all that data. We see the shipping data, we see all that, but ultimately this is for the administration to do. This is their mandate, not ours. And I know as you can see, they're again beginning to have talks with many nations, and that has the potential to change the picture materially. So we'll just have to wait and see.
Kosuke Takami with Nikkei. Thank you for doing this. the volume of imported goods increased significantly in the first quarter. Do you think that this situation could cause a delay in the impact of tariff on inflation? And does this mean that it will take longer time to reduce uncertainty?
The decision we made today? Which decision?
So the future decisions. So the volume of the imports, imported goods increased significantly. So the impact on the imported inflation may delay. So what is the impact to your future decision?
Okay, so I mean, I think we think that there was a big spike in
He has to be careful here because of politics.
And to beat tariffs, and now that should actually reverse, so that it's the difference between it's exports minus imports. So and imports were huge, and so that it conveyed a very negative contribution to U.S. GDP, annualized GDP in the first quarter, as we all know. So that could, in the second quarter, be reversed, so that we have an unusually large contribution to usually positive. That's very likely. As
this week, that's not true, by the way.
You could also have, very likely you'll have.
Our exports are dropping right now actively.
It'll turn out that consumer spending was higher.
As of this past 2 weeks.
So you'll see those data revised.
China's are increasing, ours are decreasing right now.
And so I think this whole process is going to
But that is a very fluid thing.
Make a clean assessment.
It doesn't make a trend in like 2-3 weeks, even a month.
Final purchases, which doesn't have inventories, government, or.
But you're gonna. I would expect exports and imports to be a bad fucking print. This next one.
On private demand, but that too probably was flattered a little bit by. By strong demand for imports to beat tariffs. So that might overstate.
Nope.
3% PDFP in the first quarter. That might actually overstate. So it's not really going to, I don't think it's going to affect our decisions. I will just say, though, that it's a little confusing, and it's probably less confusing to us than it would be to the general public as we try to explain this. It's complicated, and GDP's.
It looks like shit right now.
Signal. It's a little bit confusing, but I think we understand what's going on. It's not really going to change things for us.
Courtney.
Courtney Brown from Axios. I guess, we talked about some of the indications of potential layoffs, price hikes, an economic slowdown, all being evident in the soft data. I'm curious why the Fed needs to wait for that to translate into hard data.
This is this trade is what we're doing right now to make this next move up. We've already hit this target here.
If the hard data is not as timely or might be warped by tariff-related effects, are you worried that?
So this is this trade right here to go all the way down here.
No, I mean look at the state of the economies. The labor market is solid. Inflation is low.
Yeah, they don't.
We can afford to be patient as things unfold. There's no real cost to our waiting.
This is all. These reporters are literally spewing bullshit right now. They want this story to be true, and it's not.
Those call for different responses, and so until we know potentially
like zero economic data right now is bad or ramping or rising astronomically. Consumer is fine. This is all garbage questions.
So
it's been like this the whole presser here.
Just a very quick.
And these guys aren't dumb. They know better.
Was this sort of vibe?
So they're repeating sentiment.
The sentiments expressed in soft data did not translate.
There is no fucking soft data.
How are you thinking about that when interpreting some of the signs in the softer survey data?
Just survey, that's it.
Going back a number of years, the link between sentiment data and consumer spending has been weak. It's not been a strong link at all.
That's right. There's no fucking link. None. Not a goddamn thing.
Speed and size. So it wouldn't be the case that we're looking at this and just completely dismissing it. But
he's fucking correct. He knows.
To wait and see. you're right that we had a couple of years during the pandemic where people were saying just very downbeat surveys and going out and spending money. So that can happen, and that may happen to some degree here. We just don't know. This
sentiment is what you're fed all day long, like all the shit that you eat all day long. It is not the fucking facts yet. It can be and will be. If we do keep down this road, it will be, but none of the data supports anything that most, or like John Q. Public thinks is true.
And we have seen in the shipping data that imports from China into the Port of Los Angeles have plunged. And
that's false, too. And it's only 2 weeks. That's fucking false. They've moved their shipments elsewhere.
That prices and inflation.
This is another bullshit, like scam bullshit.
Do cause significant supply chain disruptions.
I mean, we don't have, the kind of tools that are good at dealing with supply chain problems. We don't have that at all. That's a job for the administration and for the private sector more than anything.
That's still not a true statement what that guy is saying.
With our interest rate tool is we can be more or less supportive of demand.
They're fucking washing all of these goods and sending them from other ports into the U.S. As a matter of fact, the data came out yesterday, and we are up on imports right now, literally higher than last month and the month before, right fucking now. Sorry to be angry about this, but it's all scam.
If I could follow up on that.
And I can't stand hearing it on public like this.
Replacement for you when your term as chair expires next year. But your position on the board runs through January 2028, I believe. Would you consider remaining on the Fed board even if...
I've got a link for you guys to see this shit. You can look this shit up yourself. I'm going to post in the Discord right now. Hold on.
Is all on, trying to navigate this.
Everything that guy just fucking said is, again, public sentiment that is not fucking true.
For the people.
Repeating diarrhea.
Think about day and night, and this is a challenging situation. And
utter diarrhea.
Right now.
Let's go to Jennifer for the last question.
Chair Powell, Jennifer Schonberger with Yahoo Finance. Public records of your schedule so far this year show no meetings with President Trump. Past presidents Obama, Bush, and Clinton have all met with Fed chairs, and you met with Trump during his first term. Why haven't you asked for a meeting yet with the president?
I've never asked for a meeting with any president.
Yeah.
It's not, I wouldn't do that. There's never a reason for me to ask for a meeting.
Ever.
So would you want to meet with him if given the opportunity to get more information?
It's never an initiative.
I don't know why the fuck.
I don't think it's up to you to seek a meeting with the president, although maybe some have done so. I've never done so, and I can't imagine myself doing that. I think it's always comes the other way. A president wants to, but that hasn't happened.
And if I
think I'll get you guys that link for that, what that last guy just asked. I'm going to post it right now for you.
Far down rates will have to come to try to keep a balance on the inflation mandate as employment weakens?
I think once you have a clear direction, you can make a judgment about how fast to move and that kind of thing. So it's really the harder question is the timing, I think, and when will that become clear? And fortunately, as I mentioned, we have our policy in a good place, the economy's in a good place, and it's really appropriate, we think, for us to be patient and wait for things to unfold as we get more clarity about what we should do. Thanks very much.
Okay, that's good to see. Okay, so we're done with this. I wrote down some notes here on the event. Now, there is a big takeaway here from this FOMC. The big takeaway here is you can feel every reporter in that room was either regurgitating sentiment in their questions, not based in fact at all. Like literally every question that Jerome just sat in that room answering questions saying, this is not true, this is not true. And the stuff that he didn't either want to address or isn't spending any time looking at, it's like a gotcha moment. This is happening, but it's not. Even that second to last questionnaire, I just posted a link to you. Yeah. So that guy right there, he gave an update yesterday. He went right to the websites and showed that this is fucking bullshit. Utter bullshit. And you can even go and cite these things yourself. You'd be shocked that we literally, I thought the same thing. I was like, yeah, maybe the next, like they're telling me 2-3 weeks, and they're telling me 5 weeks, maybe 8 weeks. And then last night, that fucking guy popped up in my feed. I watched it, and then I went to the websites. And this shit is not true. If you're looking, I'm going to tell you right now, if you're looking for like a shortage shock, like shortages or empty shelves, that shit ain't happening anytime fucking soon. I'm just gonna point blank say it. It's a bullshit scam. Dude, we are literally importing more shit this month than we've done all year, right fucking now. And of course, I'm scared of it. I'm like, are we gonna have shortages? Are we gonna have like empty shelves and shit like that? Not happening. And he explains what they're doing. So. And this is even people ordering goods and shit. Like China's literally, they call it washing imports and shit. And this guy goes through it all. He's like, all this shit's coming in right now. There hasn't been a single stoppage. And as a matter of fact, they're also moving ports of entry. Like if you go to the East Coast ports of entry, they're way up. Even though the like Houston ports are down, and the number of ships coming in as high as it's ever been. So this is pure sentiment. Like this is shocking to me. Might be one of the first FOMCs I have seen where almost every question was not based in reality or tried to hint at some kind of like cover up or, something that's like, what are you telling us right now? And he had to defend that throughout the entire day today. As a matter of fact, I want to give you some quotes here from this FOMC. 1, Powell saying, well positioned to wait for greater clarity. 2, the economy is in good shape. We think we can be patient. If we had bad data, he would not make those statements. He also said that the cost of waiting is fairly low. He also said that we're watching extremely carefully, and we don't see much evidence in actual data of a slowdown in the economy. And these are critical for you to understand the difference between the sentiment versus the reality. And that's you and I and everybody out there. If we were having real shortages, if this was like COVID, you need to know, right? You want to, even in your own life, know. This is manufactured, literally manufactured sentiment that has no basis in fucking reality. I'm shocked at this. I'm like literally shocked. And I wrote a note just now about this, and we're all on board this train right now of crazy. And I want to speak to it right now if I can. Hold on, give me one quick second. I want to say this see this note that I just wrote here. There is literally, like, listening to these reporters frighten me. They scare the shit out of me listening to them right now. And there's a reason for it. If you get politicians, you think, I'm going to stop for a minute here and just think about this. You have politicians, no matter what their party is, with a mantra of this is happening. You also have Wall Street with a mantra of this is happening. You have the mantra of financiers, CEOs saying this is what's happening, and they're giving a soapbox to people that don't know better to amplify that message. It is so dangerous. And it's not true, and we're self-realizing this as the truth right now because we are not there yet at this moment. And the only voice of reason that I hear is him right now. No matter who it is, where it is, what it is, he is the literal only voice of truth and reason consistently that I've heard on public. He's probably the only friend you have left telling you the actual truth or close to what the truth is. And the scariest part about this is that the intent here, right, is to manufacture to turn those that do not want to watch the world burn to disengage and join in burning the world down. So this whole intent here, this entire intent across markets, social media, news, doesn't matter, is to turn the last of you, literally the last of you, no matter who you are, what you do in your life, into believers in this fucking falsehood, which is mind-blowing. It's not bad or good, but it's mind-blowing to watch it in action. There's a literal concerted effort, and there's no contra trade to this. There is no upside trade to this. There's no, hey, this is fake. Market's going to go make all-time highs, trade 7,000. This is the manufacturing of changing our economy permanently. Almost like the turn of the century during the Industrial Revolution. This is the AI robotics revolution trade in removing the cost to manufacturing for CEOs and power and money. That's what this is. And it's fascinating to see because this was literally manufactured bullshit FOMC by fucking reporters. Our fourth estate that shows that you cannot fucking trust them. These guys are not dumb. They are hella smart, and they know the truth. So and you heard it there, right? He kept having to tell people that were asking him questions, stop mixing sentiments in your questions with what you're asking me because it's not true. I find it kind of disgusting, to be honest with you, but I don't want to put my personal reasons in there, but it really, it even involves nation states and consortiums of nations that are fighting for the last rat on the ship as we do this transformation. And it's kind of shocking being alive, watching it in real time. I'm not going to be a Luddite about it. I'm on board for it. But the intent of this kind of stuff is to turn any of you out there into joining that team. They need everybody on board for it. Power and greed, baby. That's what it is. It's wild to watch. Absolutely fucking stunning and wild. And if you think anyone out there is looking out for you, they are not. They want you to join on the rat race and to see who's going to come out on the other side in power. Shocking. I found that FOMC particularly, and I watch these fucking things every single time. That was a shocker to me. You've been let down. At any rate, the FOMC is over. Let's go back and look at the day today and see where we are as it pertains to the market. So outlooks here. Nothing has changed. Zero has changed from your market brief. We're going to go through this really quick. Show you what your market brief said last night. I'm blown away by that. Blown away. It's kind of like the, I don't want to say this, but it's horrible to say, but it's like, tight 1 second there, get rid of all this noise from today. Nothing has changed on outlook for the rest of the week. I am utterly shocked that the plebs, you and I, the poor, unwashed masses would ever, in this day and age, attempt. Here we go. Nothing's changed. Still upside expectations up here. Up and away into the weekend and into next week. Whoop. Still 575. I know we're on a 1-minute chart right now. We really can't see it, can we? Upside move here. And still waiting to launch as soon as we murder the chain. Price target, still 565 and then ultimately 575. It's actually 570 down here, and then we do one more bump up to 575. But I am shocked. I gotta tell you guys something here. Like, I'm blown away. It's kind of like it reminds me so much of facilitating. You would think that I was raised in a time with grandparents in World War II, with the rise of technology, and people thinking we were going to be smarter than prior generations. And all of this proves is one thing. Nothing with humanity has changed. Greed, power, baby. Same as it ever was. Blown away by that. And we are, as the plebs, being asked right now and told to participate, to enable this, just the same shit again. Just like the turn of the century. Nothing is different. Put that right there for you. Murder the chain, by the way, into the close here. Shocked. I'm not kidding. They need us to be willing participants. Whew. I guess we got to, what do they say? Get mine? I got to get mine, bro. They're not going to leave me behind. Absolutely stunned. Like, I don't put it past certain people, but the reporters, man, dude, you guys we got nobody on your side or our side. Zero. Like, absolutely nobody. Come to the dark side. Oh, I'm already there, but whew, blown away. You look back, if you're young watching that shit right now in this world, you wait till you see this in 50 years or 100 years. You're going to be shocked. By the way, it's 3:51. We've got 9 minutes left into the bell here. We do have some more earnings after the close here. Give me one quick second. I am blown a fucking way by that. I'm not going to lie. Absolutely stunned. That was the entire press corps. All he did was defend that entire fucking FOMC bullshit. That's bullshit. That's bullshit. That's bullshit. Separate the bullshit, please, sir. Separate the bullshit, please, sir. All bullshit. Note here we have the low in the day down here. We have this low right here. Absolutely, utterly fucking bullshit. I'm blown away. Would not expect that from almost every reporter. I mean, there was a couple reporters, but you're talking about 95% of that press corps was literally like, hey, I don't even do research anymore, man. I just read Twitter. And I just ask questions based on Twitter right now, or Reddit, or wherever. It doesn't matter. Utterly shocked. I'm shocked. It's so rare to see something like that. I don't know if I've ever seen anything like that. Maybe I have to think about it, but I don't think I've ever seen anything quite like that from a press corps in total. I've never really seen the chair sit there and just say, no, you're asking this question from a place of sentiment. He repeatedly had to say that. And what is the intent is the question. The intent is for, I don't know if anyone, I'm not bullish, but if there's any last vestiges of, like, hey, we're going to go to 8,000 or whatever, that shit is done. We are making that transformation. When they fucking met and started building those factories, they made this decision back in like 2021. Started building those fucking factories, and that train doesn't stop for anybody. You will be left behind as it happens. Unreal. And I don't think this is the finish of being shocked either. I remember even a year ago, I think on this show, I said to you guys, they're going to get rid of the national education fucking place so they can make dumb kids to fight wars for us. Fuck. Like, this shit reminds me of everything I learned in college. Like, oh my God. I have to go back and read books on this shit, like past like 6 months. I'm like, I gotta go back and fucking brush up on this stuff. It's some wild wild to see it happening again. You know, what's reported in history, recycled yet again. Amazed by it. All right, what do we got here? Let's see. We got some. So that was FOMC. It was a bizarre one for me. I'm going to tell you guys that fucking FOMC was bizarre. In particular, the Q&A. The rest of it was fine and normal. He was pretty much in line. He's did a little bit on the potential negotiations with China, but he stayed out of it. He was asked about meeting with the president again today. You know that he's never going to say yes to that shit. Oh, yeah, I requested a meeting with the president, and I'm going to get involved in the politics of policy. That ain't ever happened with Jerome Powell. Ever. The only thing that he'll ever maybe hear him fight back on is the assertion of power by the executive branch in the Federal Reserve, which, of course, Jerome has said no to. All right. Quickly, because we're almost there. It's 3:35 in the afternoon. If you are a member, nothing has changed in your brief, literally. Not a fucking thing has changed. Nothing material has changed. Nothing's materially changed from the Fed. Zero. All of that reporter shit was garbage. Utterly fucking garbage. And if they fucking reprint that shit anywhere, it's garbage. Like, I've never, ever, like, I am blown the fuck away. Every one of those fucking reporters, I can't get off it, I'm sorry. Every one of those fucking reporters should go to their newspaper and write a story and say, the chair told me to go fuck myself. That I was wrong. God. Oh. What the fuck is going on out there? The chair told me to separate my sentiment and my questions, like, repeatedly over and over and over and over. I got to go back and watch that shit. That was some of the worst lines of questioning I've ever fucking seen. Ever. From top to bottom. Ever. And the responses from the Fed is even more embarrassing. That he had to repeat that over and over and over again to these people. All right, here we go. Sorry, I got to get off that response of that hot take on the Fed. The Fed. I would be fucking firing if these fucking reporters worked for me. I would fucking fire these fuckers. I would. They'd be on the fucking street looking for a fucking job. For not spending a goddamn hour researching their questions first. Hold on here. Give me one quick second. I got to dig through this stuff. I got to find the earnings calendar for today. Utter horseshit. Utter bullshit and lies. Fuck, these fucking people make six fucking figures. 6 figures to ask those questions. Access. God. Ugh. And I'm not even looking for a question for a positive answer. Just ask a question based in reality. Even if you want the negative answer to it, if you're gunning for that, that's fine. Just ask questions that are based in reality. Mind-blowing. That might have been the worst Q&A I've ever witnessed. I got to think about this deeply. That might have been it. That might have taken the fucking cherry. There was like a cherry on top of full-on regardedness. That was it right fucking there. Hang tight here, guys. All right, after the bell today. After my manufactured outrage is now complete and I've gotten it all out of me right now, we're going to switch gears here now. And I want to talk about what we have after the bell today, we've got AppLovin, Carvana, ARM, IONQ, bunch of retail favorites in here too. AMC, IONQ. Then we've got Cliffs, we've got Oxy. Tomorrow morning, though, we get another retail favorite. Excuse me, Peloton, Shopify. We got some more oil guys. We got ConocoPhillips. And then after the bell on Thursday, we get the Trade Desk, Coinbase. We got TerraWolf on Friday. So what we're going to do is before the close today, we're going to take a peek at some of these reports that we have coming out after the bell. Remember that the big squeeze should not happen until next week, into the 16th, starting on Friday or Monday. For the big move higher, it's normally next week into OPEX. I don't see any downside here, by the way. Any kind of like bloodbaths, any trips down to like below the daily trigger, none of that stuff. This fucking FOMC was bullshit. Up and down all day long. We go up. That's where we go. That was utter garbage. The only shock that I could see is what I would reiterate to you from this morning about the Russia-China meeting. For VE Day, you do not want to see Russia stating to, China stating to Russia that they're going to provide material arms to Russia in its fight against Ukraine. Other than that, remember that you've got Trump saying that you're going to get news likely related to de minimis as a permanent or non-permanent change. And I want to tell you something else about that too. De minimis is where tariffs are right now. They are enforceable in de minimis. They are not being enforced through cargo means at this point for a whole litany of reasons. Washing where these goods are coming from comes into mind here. The de minimis, though, is a big one. You're paying that. It's like a blanket tariff that they're collecting no matter what right now on de minimis, although they are even beginning to change the countries that de minimis comes in from. So even the de minimis stuff from China is starting to be pushed off into other nations as a country of origin. And we still have goods and services that are still in storage for a lot of these companies. Even though you're hearing nice little squeeze right now to the upside, trading 561.66 to the upside. Do not trust these fucks. Do not trust these people. Now blasting higher to trade 562.50. I kid you not. Slapping R2 right now, 562.44. Let me check my shit right now. Shit's still alive. My fucking calls are still alive right now. I kid you not, guys. I kid you fucking not. All right. My shit's actually alive right now still. All right. So, moving on. I love that we're squeezing as I tell you in the face of your own doom that this is bullshit that we're squeezing because I fucking know it's bullshit. Like 1,000 fucking %. SPY now trading 564. Oh, and I'm making money right now, baby. There you go. There's your fucking trade. There's your 0-date call trade that I put for you inside the Discord. From open to close. From open to close. From open to close. The request in Discord was give me the entry and the exit. There you go. Just sold 54. Thank you. No, wait a minute. 53. I didn't catch 54. God. Oh, Jesus Christ, they just went down to 12 cents. I guess I was the last asshole out. That was fast as fuck right there. I guess I was the last guy. I was the last motherfucker in that trade. Those fucking things went from fucking 5 cents or something down to like 12 cents in like 2 minutes. It was the last bag holder. They're cranking again right now. 565 Cs. Utter fucking bullshit. God damn it. That might have been the biggest fucking grift I've ever seen. Oh, what do I do? How dare you? How dare you, press corps? All right, so what do I got here? I had an upside sell in mine, so I didn't catch it. No. Nope. Then they got burned down to like fucking zero. No, not zero, but they're pretty fucking low. They were like 12 cents or 10 cents or some shit at one point. Yeah. How dare you? Okay, so we got to talk about earnings right now. We have earnings after the bell. Nothing has changed in your brief. That really pissed me off. Like I don't mind jumping on this train or like this bear. I don't mind changing our economy. I don't like how we're doing it, but as it pertains to our stock market, and as this today question Q&A went, I find it. I don't know if it's disingenuous. I don't know if just we're all losing our fucking minds and asking questions, the right questions that are important. And I rely upon that. I want Jerome to answer those questions. And he did today. He did, but like this guy's catching it from every fucking angle. And no matter how much you don't like that fucking guy, no matter how much you might not like Jerome, I've had problems with him too. I'm shocked that he is the only person standing up to this. I'm shocked that it's him. I never would have expected him to be a big voice of reality in a time when there's no fucking reality. And I depend upon reality. I don't like the bullshit. I don't like the bullshit. So here we go. Okay. So we got to talk about these earnings. We've got some to look at for the close here. SPX blasting up to its trend line again at 56.50. The next target to the upside for tomorrow is 5,700, or next 2 days, 5,700, 5,725. If we can get some gamma roll to the upside. You guys already know where we're going anyways. I've been telling you this for like weeks now. Not you guys, but I've been telling the membership where we're going and walking them through this entire thing. So we got to talk about earnings right here and make sure we can watch out for any landmines, pitfalls, and that sort of stuff. We're going to take a peek at what we've got going on after the bell today. So we're going to, let me set this up for you guys. Give me one quick second. If you've never been here for earnings, we do a pretty damn good job calling them. Even if it's a delayed reaction, we pretty much nail these fucking things like 70 to 90% of the time. Our win-loss ratio is pretty goddamn good. And we try to guide you through, like, could it be a delayed reaction? We close this out and then print the upside. We fade people with earnings all the time here, like all day long. We keep this shit on record here on video. So if you don't believe me, you can always go back and check. We're going to check app right now. App Lovin'. Let's go down and take a look at earnings after the close and see if there's anything we can capitalize on here. So here's App Lovin'. Let's have a look-see and see what we got going on here. Let's look under the dress. See what's happening with this shitco. This shitco is following a lot of where we are, isn't it? I call it a shitco. Let's take a peek here. This is a daily basis here. It looks like it wants to accumulate a little bit more on a monthly basis. I like to see this weekly getting higher right now. In the daily, I like right now. On a 30-minute basis, I like the 15-minute, the half an hour, the hourly. There is something about this I don't like, which is this series of. I'll show you this. We'll look at this together. I don't like this declining positive velocity here on an hourly basis. I mean, I like it in the short term, but it's also just begging for a take the money and run type situation. I don't know if this is after the bell or after the weekend maybe, or if this happens after the 16th, but there is a large drawdown on a daily or weekly basis coming in the next week or two on this ticker. On the surface, it looks pretty good. Now, this decline right here, I want to show it to you. You know, something like this right here, that doesn't look pretty, does it? But we're not at the top of the daily, which is good. So maybe not this deep. Maybe it's just a little bit of a cut to the downside, but the daily trigger should hold. So let's look at, so daily trigger should hold. We got to keep that in mind. What do we got here? We got, God, it's like I've never seen the enshittification. Like the enshittification of everything. This is why. App Lovin' has a huge move expected. 18%. By June 6th, 25%. By tomorrow, they've got a expected move of 8% by Tech Friday. I want to talk to you about this really quick. And their hourly looks good right now. So this is a good stock right now for a trade on. If you've never heard of this before, there's a great trader. His name is Vol Scott. If you know him, he's a very close friend of mine. I have a lot of respect for this man. He's a very good trader. Very, very knowledgeable. He's been around forever. He's educated. Went to one of the best finance schools in the country. If you don't know him, his name is Vol He's on Twitter. And you got the, you got the dong and the balls, or you got the nipples and the, I don't know what that is, the JJ or whatever down here. You got the inverted head and shoulders here. And they just like you can see this here, right? There's an active, I want to show you guys this, okay? You can see it plain as day. So like that sentiment, you can see the pounding, pound, 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 pound. And this is all sentiment. You can see this in SPOOs. There are people out there that either missed the whole trip down or they want to see the world burn. I don't know if it's that they missed everything. I don't know. Like, I can't tell here if it's, I can't tell where all of this comes from. My assumption is that, like, this is not the best interpretation, but my assumption is that retailers maybe or society at large didn't get the drop to here, and now they want to see the second leg, and so they're gonna fucking just garbage talk to get the second leg. Not so fast. You're going to get your balls squeezed before we do that next leg to the downside, in my view. On the greater market, it ain't that fast. Always one step behind. Always. Wrong side of the fucking trade forever. That's what these people are, like, wrong side of sentiment, wrong side of the trade, never ends. Now, this daily is very strong here. This is pretty strong. You've got some shit you got to clean up down here, though, some messiness. But we're bullish into the close here in AppLovin. And I do not see us closing this gap unless it's quick. There's something else to note here, though, too, which is you've got a daily trigger crossing the weekly trigger. We are going to come back and revisit this. Now, this could take a few days. It might happen today, but you could get 1, 2, 3, 4, 5, 6, right? 1, 2, 3, 4, 5, right? So next week, bloodbath maybe, or even the 16th over here. Come back down here and party. AppLovin recovering right now. Let's start counting this up. Velocity looks great on this ticker. I do want to show you this one thing here. We got 1, didn't violate. 2, 3, right? 4, didn't violate. 5. So the question becomes, how high do we go if this is true? And this looks really good here. So we have the impulse move to get above the prior highs right here. We got this high right here. We failed it right here. You might not even count that. This would be where we got above. So there is potential for a down move here in the bell if you follow Elliott Wave, which I do, but I don't believe in it, and then the rip higher. They are set up for a delayed reaction to the upside. So we are going to count that today because of the options market, and this is a retail favorite. We did break this one higher, and we're going to attack this one above. So here's my take on AppLovin into the close today. Whoop. AppLovin. Into the close today, I want you to know that I'm bullish. I would not buy fucking tech zero dates or anything like that today. I would be looking for call spreads to the upside. And if you wanted to enhance the move, I would look at buying zero date calls on Friday or on Monday for this stock if we roll down first. So the way is higher. Hold on here. And I'm gonna do this one just like I think it is, which is one, 2, 3, 4, and then 5 right here. Now, within this, see it right there? And I don't count this one right here because you did not get above that one right there until just now. Within this trade, there could be a delay. There's like, trades within trades and stuff. You have an 8% upside move expected. You have a larger move down the road. And you've got this gap down here. So the real problem with this trade is, I mean, don't fucking outrun me, app lovin'. Don't front run my fucking expectations here. Goddamn app lovin', front running my shit. Right about there. There it is. Now, I think if you were to take this trade today, I would say to you to put more time on it. And you can see this is the 19th. I would say the 16th. Right about there. Price target, believe it or not, 346. Now, there is some problems here. Let's look at the bad here, okay? Let's say we come up here and they fake us out, slam us down, close the gap, and we have to come up and fight this trade into the 16th. And then we get a bigger down move over here. It's still the same move, believe it or not. You're still within range. And if this takes into the end of July, you want to put enough time on your trade to capture the upside move with call spreads. So I would say to you some call spreads with, 260, 270, and 290 with a summer date of 350. 350 for mid to late July would be the best trade, the safest trade. And to boot, if you catch the print up here, you can take the money and run. If you take the print up here, take the money and run. If you take the print over there, take the money and run. Let's say we reject this and come down tomorrow or today and close the gap. You have another opportunity to get long here. And I would also posit to you that if we get down here at all, if we come up here and trade down here, 0-8 Friday for this, 0-8 Friday with an expiry for next for the 16th, right here, would still print you that 8% move in satisfied dealers on both ends. So the trade on this stock is call spreads for July, target 350. If you wanted to pick up some zero dates to enhance the trade, I would wait until, personally, for that kind of risk, I would wait for tomorrow. Or I would wait for Friday, or for, not tomorrow, Friday or Monday, and I would try to get that trade up here to catch that upside. So it would be like a 280, 290 to like a I'd go 300 and try to print 320 into the 16th, believe it or not. I know it sounds crazy, but that's how I would do this trade. So, bullish. And I expect any pullbacks here to hold due to daily velocity on this ticker. Ultimately, upside target, 349, possibly break above 350 here by midsummer. I'll even give you here's June. Yeah, there's July over there. Go to a 4-hour. Just in case we want to stretch this out a little bit. bullish. Here's mid-July. I don't know how long it takes to July 1st. Yeah, first week of July. Right there. Worst case scenario. I don't even think it takes you that long to get there. That would even posit this right here. 1, 2, 3, 4, 5. Nice big push higher. Still in line. Worst case scenarios out here. This is for pricing, or this is for options. Let me check this really quick here. Like right up in there, right up in there. Wham, 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 wham. Bullish. App loving. I would be fearful of this too, man. I'd be fearful of we get the squeeze after the bell, then they plunge it. Let me show that for you on an hourly basis. Just like that, baby. And this is also going to imply you got that prior high right there. You want to that prior high right there. You want to get up there, do that one, come back down. Then you're off and running to the upside. Oh, they already did it. They already did it. Already closing it out. Look at that, baby. Let's watch it right now together. Near perfect tag, right? Near perfect. Look at that. Look at this after the bell, just reaching down right here. Take all your stops down there. We didn't even get to any others. We just got to this one here. That was it. We didn't even get to the other reports today. Spent a half an hour fucking talking about this stock here. Well, I guess I'm grateful we did AppLovin and not Carvana and ARM. I'd like to see ARM next. Just go in there and take all your stops. I don't see a report yet. No, AppLovin's not till 7. AppLovin doesn't report until 1700. Don't sweat this at all here. Don't sweat this in any way, shape, or form. This is all just taking your stops in here. Don't get short here. This shit's gonna moon. Unless I missed something here. Yeah, I've got earnings not out yet on them. Someone was saying that their earnings are out at 405, but I don't see any report on their earnings. I see it. Someone else posted that their earnings are at 1700. That's 5 o'clock for AppLovin. Maybe that's their guidance. Let me just check this really quick. Still don't see a repeat. There we go. Get back up there, baby. Get back up there. Let's watch this price action. Come on, AppLovin, do it. Go moon time, baby. Woo! Come on, AppLovin. AppLovin hitting the up and downside target to close the gap. Come on, AppLovin. AppLovin trading a high of 326.23. Time targets 350. Now trading 329.
So following the close of the US cash equity markets, just looking at the market wrap for today's sessions. Equities rebounded after Powell reassured investors that the economy is still solid despite uncertainties stemming from Trump's trade war. Following a small decrease caused by Fed comments indicating that the economic risks had intensified, the S&P 500 rose. The rebound was also fueled by a rise in chip makers.
AppLovin now coming into the green box above, trying to trade 323, 334, 337.
Currencies as Treasury yields fell. Fed policy
336. Go up and tap it, baby. Hit it.
Powell's press conference today.
Slap the fuck out of 347.
Higher unemployment.
Come on, AppLovin, a little bit more.
Demand stable. Policymakers have stated that they are willing to keep interest rates.
Oh, I bet these fucking AppLovin fucking bulls are freaking the fuck out right now.
Price action today was especially muted when compared to April 16th.
AppLovin with a hit of
after Powell first mentioned the growing tensions between the Fed's dual mandate of control.
344.86.
Then, at a period of market turbulence, his remarks were interpreted by traders as a commitment to put the fight against inflation first, even if it meant that investors would pay a price. The S&P 500 rose spot 4%.
Woo! AppLovin, baby!
Spot 4% as well. The Dow Jones rose spot 7%. Yield on 10-year treasuries declined 2 basis points to around 4 spot.
Still pumping right now on AppLovin. That's right. Show that shit out. Target hits. Didn't have to wait for July on AppLovin. I gave you the long distance on it. I guess if you bought those fucking spreads, you're going to get paid tomorrow. I'll see you all tomorrow at 9:30 in the morning. There's your free trade if you bought the underlying.